Roll another blunt, man. This is good times. You full of shit, full of shit, full of shit, and you need to quit. Baby, you full of shit, full of shit, full of shit, and you need to quit. I met you at my show, yelling and screaming on the front row. Jumped on stage, knocked me down, you made me horny. I drug you around, put you in the van, took you to the tail. On the way there, you was texting on your cell. You jumped out the van before I got the room. Hopped in the car with your girl and went zoom. You danced with girls like a freak. You promised me a threesome last week. Another girl, it's hard to find. What about, what's her name? She changed her mind. So many people coming through. I can't get time alone with you. At least I had privacy, single and pole. With you, I can't even jack off no more. You full of shit, full of shit, full of shit, and you need to quit. Baby, you full of shit, full of shit, full of shit, and you need to quit. You got a real bad temper. I got another woman that wants me to pimp her. Out of sight, out of mind, sipping wine, someplace I can't hear you whine. You're too controlling, my chin is something you shouldn't be holding. You need to tuck your tail, you're a woman but you think you're an alpha male. Till you're laying on the ground, bleeding like hell, begging the cops to take me to jail. Inconsiderate, selfish, when I open your legs, I smell fish. You talk too much to everybody, so flirtatious, so naughty. How can you be jealous on Facebook, keeping up with your ex-fellas? You full of shit, full of shit, full of shit, and you need to quit. Baby, you full of shit, full of shit, full of shit, and you need to quit. You don't trust me, I don't trust you. Now what the fuck we supposed to do? You disrespectful, I'll break your neck, ho.
I just have one question. How do we trade the JP Morgan digital dollar for real dollars? How does that work?
Showing off on Facebook, my privacy has been took. I was blind, but now I see. You getting famous hanging around. You full of shit, full of shit, full of shit, and you need to quit.
Like, can I exchange it on Robinhood, or I don't know. That's
Don't provoke me, I might choke thee.
isn't that a concern? I mean, I guess Lou will tell us.
My career, you're destroying. You're such an envelope.
I don't know. Oh, you short AMC to get JPC coin. Okay. Well, I'm doing my part. I got a 1 cent payment for lending my AMC share. So that's awesome. You know, it's another no ass indicator. When I start getting more than 1 cent for lending the share, then the cost to borrow has gone up. 1 cent is literally it's the lowest that you could get paid. Oh my God. Okay, well, let me start here, okay? So I saw this earlier, and this is lottery stocks. Where to start with this? It's currently happening like Volkswagen. Source needed for that.
Yo, what is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel. If you are new, I want to address two things in this video. Okay, the first thing is Trey's trades $272 price target, or whatever you guys like to say that he called the price target. Now, the next thing I wanted to address is AMC, the cycles that we've been in, and what is going to break them. When are we going to squeeze? So I was doing a little bit in the background before this video. If you guys enjoy anything in this video or just enjoy watching, please consider smashing that like button
I'm
to help the
enjoying that
algorithm
tank top.
going. And also make sure to
Classy.
drop a comment below your thoughts on the video. Also, guys, please subscribe and hit that post notification bell. Let's get right into the video.
Okay.
Okay, so before we get into the two major points, Dave Lauer, as discussed on our space call last week, SEC is considering some significant changes to market structure. Okay, guys, unusual whales.
Well, that was fast. That was a quick change, including tick size and access fee reforms. However, most importantly, they're trying to figure out what to do with the current system that sends retail orders to wholesalers. We need simple solutions to these issues. The simplest solution is to send retail orders to transparent venues where everyone can compete to provide them with the best price through the NBBO. This competition will lift all boats. Retail and institutional investors will benefit. If we combine that with tick size reform and get rid of rebates, we can also remove the access fee cap. We don't need government price controls. We need open competition at the NBBO, and all market participants will come out on top, except for the current wholesalers. Okay. So he's basically saying get rid of payment for order flow. That's the rebates and the wholesalers. That's their model. Okay, just to enumerate those changes.
Significant changes to market structure. Okay, guys, Unusual Whales posted this. SEC reportedly to do large changes to the market structure in this upcoming fall, specifically to the plumbing, per Wall Street Journal. This is the start of something. We need more than this to reach out. But I'm going to link this down below so you guys can read through Dave Lauer's tweets. Otherwise, it would take up a lot of the time during the video.
Not really.
Now, the first thing I wanted to go over...
okay, so I guess the implication there is if all else fails, it'll happen this fall because they're going to change the structure of the market. They're going to alter the structure of the market so that AMC squeezes. Got it.
Is extremely crazy. Okay, so we've been tracking AMC cycles and GameStop cycles. And what we found out clearly is that the price is being controlled. Okay, so
clearly the price is being controlled. Okay. Well, we'll just go with that. We'll just go with it.
That's the one thing we know, right? The price is being controlled on AMC, on GameStop. And ultimately, I found something that was pretty interesting. I compared this to, the Volkswagen squeeze, because that's been brought up a lot lately, right? If you don't know what the Volkswagen squeeze, this was a squeeze in 08. The stock hit about $1,000 per share, a little above 500 billion market cap. Correct me if I'm wrong. Now, there's a couple things that I wanted to bring up about this.
Oh, I see where this is going already.
I believe Volkswagen, just based off of some charting that I was doing, has been trading in extremely similar cycles to AMC and GameStop. Now, a lot of people...
Jesus. Okay. All right.
Don't believe in cycles, and a lot of people don't believe in technical analysis, but what's on the chart and what's in front of you doesn't lie. Math doesn't lie.
Math doesn't lie.
Okay, so right now, what's extremely interesting, the cycles I believe Volkswagen has been in. I've tracked this cycle all the way back, and it comes to a point where the cycle was broken, right? Right here, we started
the cycle be broken.
And Volkswagen squoze, and this was about July 7th. This thing ended up crashing down, right? It crashed down about August, September, okay? Right around there, okay? It really came all the way down to October, November, right? So what broke the cycles? I wanted to talk about this because I wanted to kind of relate it to AMC and what could break the cycle with AMC. Now, this is Volkswagen right here. These are the cycles that I have drawn out, and it's absolutely absurd the way the stock trades in this format, right? And it has been for an extremely long time. And the fact that these companies, you know, hedge funds, institutions, market makers can do this stuff to price action in these companies.
I don't think he understands what happened with Volkswagen. Like, I don't think that he knows the context of that short squeeze. It doesn't seem like he does. He's just looking at the chart and saying, oh, the pattern's similar and blah, blah, blah. But, and oh my God, the hedge funds and the market makers and institutions, they blah, 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 blah. By the way, too, I just had to look this up because I wasn't sure. Squoze. Non-standard, dialectal, or humorous. Simple past tense and past participle of squeeze. Squoze is apparently the most common of a number of dialectal variants of the past tense of squeeze. Is attested in both British and American dialect. The OED supplement shows it in American English since 1844. But squeezed is the standard form. Squozen. If something you freeze becomes frozen, does that mean that something you squeeze becomes squozen? All right.
It's absolutely absurd. And you see where, you know, the cycle plays out actually inverse when this squeeze does happen, which is really, really interesting. That's the only spot it does so. So if we go over to the SPY.
Oh my God.
This is the time period. Volkswagen squoze. Okay, so when the cycle broke July 7th, July 8th, the SPY tanked, right? You can see here the SPY tanked, the crash of 08. And by the time it rebounded, you came all the way up to about August, September. Okay, so about September. If you want to call it a full rebound, you didn't really get there till November, just about November. And you saw the exact same thing happen in Volkswagen. So
okay.
There's been a lot of talk. Trey as well has said it, right? That, you know, after the bear market,
that
this
means
big rebound.
Yeah, that gives it some credibility. Trey said it too, so you know,
is what's going to cause shorts, you know, to close their position. Now this is a theory, and I could be wrong, but I think we could be in it already. Okay.
Okay.
The dip in general, right? If this is going to correlate to, you know, what happened back here,
it's not though.
Then we're in it, right? Cycles are breaking down on AMC, and by the time this reaches a bottom and starts to rebound, AMC squeeze or GameStop squeeze will probably have been over with. I don't know how long that's going to take, but that's just correlation over to Volkswagen. And I thought it was extremely interesting that Volkswagen actually traded in cycles, which is really interesting. The next thing we can close out, just to, you know, give a little thing.
Oh man, I mean, I'll come back to the Volkswagen thing, I guess.
Trey's price target. Everyone's saying he set a price target. He didn't. He did not. Okay, so this is the fib extension. AMC, when we went up to 72.50-ish, we rejected off of the 2.618. Okay, what he's talking about is if you saw the same exact thing happen, you're going to get rejected off the 2.618, and that's going to bring you all the way up here. Okay, whether this setup's a little bit off or not, it's somewhere in this range where he's saying, you know, the next rejection on AMC could happen here, right? That's all he said. It's possible, but I want to just debunk this and say that if AMC did climb out of this little divot, I don't believe shorts are going to be able to withstand this, right? I think margin calls are imminent at this point, right?
Well, we have to go back to the hypothetical, and it's pouring rain here, so I'm sure that might be making it sound like I'm in an ICU or something. I'm not. It's just raining, storming. But if AMC is able to, I'm just going to go back and hear that again because
he said it's possible. But I want to just debunk this and say that if AMC did climb out of this little divot, I don't
divot.
believe shorts are going to be able to withstand this, right?
Okay, if it climbs out of this divot, well, I guess we should go over to the chart. Climb out of the divot. Okay. I guess that this would be the divot here. I don't know. And why does my chart not look like his? Oh, his goes down to minus 240. That's why, of course. Right, you have to make it look like this. I love how they change the price axis like that. You lose all sense of scale. All sense of scale. But anyway, you know, you guys are going to get sick of me talking about this. But if AMC climbs out of this divot, okay, all right. Well, that's unlikely to happen. Why? Because this divot is constrained by this overhead supply. All the apes that bought in these price levels up here are currently waiting. They're waiting for the squeeze to happen. But absent the squeeze, they're waiting for an opportunity to sell their shares and get the hell out of this thing because it's been a nightmare. So every time AMC tries to climb out of this divot, here, it gets sold off. It gets sold off, and it gets sold off, and it gets sold off, and it gets sold off. And that's because there's a massive supply of shares waiting to be sold above the current price. Above the current price. And the other half of this is back here before last June, nobody bought shares at these price levels. Nobody did. Not one share was sold here. So by the time you got to the June run-up, here, there was nobody waiting to sell at those price levels. In other words, there were no natural sellers. It was just buying all the way up. People were excited and happy to be in this thing. And they were being told by people like Trey that this isn't the squeeze. It's really going to squeeze. If you sell your shares now, you'll regret it for the rest of your life. I mean, that's I cannot believe those guys were saying that stuff, but I mean, I heard it. And you guys heard it too. We all heard it, and we could hear it again if we wanted to. We could go back and watch their videos. They're still up, most of them. So this was, for all intents and purposes, this was the squeeze. This was the event right there. And this is a pretty common thing. It's a pretty, well-known phenomenon that the first move is it. And if you miss that, you pretty much are going to miss out, and you're not going to have the outcome that you want if you try to get in this thing later, because that's not how these things work. Again, because of all of this here, it's just these people are just waiting to get out. So getting back to lottery stocks, if this were to do something like this, well, okay, let me say this too. Every time that we had these secondary peaks, they're lower each time. Well, these two, okay. mix and interchange those two. But generally speaking, the trend of the peaks, the highs, is down. So that's a lot of pieces of evidence there that are not pointing to something like this happening. Not pointing there. And the last, so if this were to come up, and even if it were to eclipse this peak here, I think it would be a safe bet to say that you would see something similar to what has already been seen. Because now there are natural sellers, there's a lot of them. And they're trying to get, you know, something. Now I know the apes say nobody's selling, and I'm not selling, I'm holding to zero, and there will be some people, you know, I liken it to people who don't wear their seatbelt, you know, or anything that most people do that some people aren't going to do. There's just some people that aren't going to do it for whatever reason. They're stubborn or whatever. They like to live on the edge. There's that 1 in a million chance of whatever. But generally, you know, it's not really, you're not really going to be a martyr if you hold to zero. I mean, I don't care what anybody does. That's not the point here. It's just to highlight why this narrative is flawed. And, you know, after thinking about it and watching this stuff and observing what's going on, I think this is the easiest way to understand. Again, I think this could be explained to a 5th grader, and I think they could understand this concept of overhead supply. So there's really not any evidence that that would happen. Not any evidence. So, but you know, if you throw a Fibonacci extension indicator on, you know, and squish your chart down, I'm surprised he doesn't have it on log. That's what the pros use. But you can make it, you know, you can make it look like anything's going to happen, I guess.
I think margin calls are imminent at this point, right? At least pass. I mean,
and I think that you have to, literally, you have to believe, in order to come to a conclusion like that, you have to believe that there were shorts that entered back here and held through all this and are still holding through all this. Because that's part of the narrative. The shorts haven't covered, and that's just unlikely. It's unlikely to happen. So yeah, I mean, margin calls probably would be imminent, but again, it you know,
even past $100, I think it's imminent. They're kind of screwed. Ultimately, I think they're screwed. And I think whatever the
oh yeah, the last piece that, and he just reminded me. The last piece. The shorts are in control here. Short sellers are in control. I think was it Manuel who said, who's going to generate 700 million volume per day with what money? Retail lost money on memes. So referring to the elevated volume back here. So volume begets price, or, you know, with massive volume, you have massive movements in price. So where's that going to come from? Where's that going to come from now? And I would say that these elevated volume days, 170 million, 226 million, 226 million on a green day, and then 212 million on a red day. And then there was 104 million recently, there's 106 million recently. Now we can go in and look intraday. So a lot of this is short covering, and a lot of this is short selling, short covering. So that's why I say the shorts are in control, and that's literally kind of the opposite of a short squeeze. Like a short squeeze places the shorts into, you know, kind of a bind. They're forced to get out, because if they don't get out now, the price is going to keep going up. So they're going to have to get out at a higher price. But the way it is now, there's such anemic volume, other than institutions and short sellers and short covering. If they're literally able to cover millions of shares in a day, and the apes don't even realize it or care, that kind of negates the possibility of a short squeeze, because they're not being forced to cover. They are taking profits. And that's kind of a major difference. Like, as shorts get out up higher price levels, you know, the higher it goes, the more money they lose. We know that. But if you shorted this stock, let's say you shorted this stock somewhere over here, or somewhere over here, right? You shorted it here, and you covered in here. Okay, so let's see, what would we got there? That's 58% change in price, or $26 per share. So if you have even 1 million shares, that's kind of a lot of money. Profit. So it's something that, you know, it's just, this was a problem from the narrative, with the narrative from the beginning, was it ignored the realities of what's happening. It ignored, you know, the nature of short selling, the dynamics of short selling. And I'm sure that he's a good person. I'm sure, you know, he's probably better at YouTube than I am. But, you know, this information is terrible. You know, it's nothing personal at all. But this is not anything like Volkswagen. And I'm gonna look at Volkswagen here in a second. I got a good resource on that. But it's just not like Volkswagen. And there's no catalyst to make this climb out of this divot. So, you know,
price is going to go to, it's going to go to out here. Right now, while it's controlled, I think fundamentals, technical analysis, everything comes into play. But when it's actually moving, I think that's out. I think that's debunked. But again, guys, he didn't set a price target. Today, what happened? Let's hop over to the daily chart real quick. A few videos I put out over the weekend, people didn't like. They weren't really a big fan of the theories, but ultimately we came out to that $25 was the median, and I never said to sell there. All I said was that in the near future we're probably going to
there will
come
be people
up to
selling
this level.
there. There will definitely be people selling at 25 if it goes to 25. I was looking at the volume profile bars, and I think, what did I say? Was it 25? No, it was 20. I'd be surprised if it gets back up to 20, personally. But that's just my opinion.
And what this is going to indicate is the move, right? The move higher. I think when we push back up to 25, this could indicate a move higher. I'm not saying that, you know, if we hit that, you should sell there. And then in no way, shape, or form did I say that. Now, if we do come to this, and this actually does play out, right, because I believe this is inverse, and I think this is the second half that we have to play. Now, if this,
wait, what?
If this did correlate over,
is that cycle talk right there? Inverse. What's
no
inverse?
way, shape, or form did I say that. Now, if we do come to this, and this actually does play out, right, because I believe this is inverse, and I think this is the second half that we have to play. Now, if this
inverse, second, I'm trying to understand. So this here is this. No, wait, inverse. So it would be like instead of going this way, it would go this way. I don't know. I'm not sure what that means, but I'm not hip on the cycle talk. So I'm not hip on the cycle talk.
If
no apes are selling, Manny. Apes don't sell.
Did correlate over. This isn't going to be perfect, guys, right? I'm just doing this on the fly. So if this correlated over,
oh,
it fits pretty decent, right? You're
okay.
Probably going to hit
so
a low.
But why would that be the case, though? This is the GameStop squeeze. Why would that be? I don't understand the basis for this cycle where things are literally copied and pasted and flipped or mirror imaged, and why would that be the case? You know, what basis is there for that other than it looks similar? Remember, this is when the buy button was removed too. They stole the buy button. So theoretically, you know, one might be able to say that this was truncated. It was limited, perhaps. So that's reflected in this price chart, reflected in these bars. So how are we to, you know, how would it correlate over to here? Are they going to remove the buy button again? This is starting to get like, we're like, you know, Madame Ruby or something. I don't know. This is, I mean, I haven't watched enough Astro, clearly.
In the $7.50, $8 range on AMC before this rip. Break out of this and probably tap around 25, you know, late July. And this is probably going to start the next move up. Now, this is just a long shot here. This is what we got for today. Overall, AMC red. GameStop, I believe GameStop was red as well. Yeah, GameStop red. As long as the SPY is tanking, don't expect AMC to GameStop to fly unless they are going to squeeze, because right now market makers do have this under control. So guys, that is just a quick video.
So yeah, like I can tell that he thinks that market makers control the price. Like independently of supply and demand from the orders that they're asked to execute. And that's just that's too conspiratorial. Like that's a non-evidence-based approach. That's basically, that would be like a lottery type situation. But I just can't get on board with that. So here's some comments. This is different from Volkswagen. VW squeeze was during a different time, and this is a way more controlled squeeze. I mean, controlled squeeze. No. What it is there's no buying. There's no retail engagement. So it's not a controlled squeeze. It's just that shorts are able to cover with minimal impact, because there's no other natural buying pressure that is putting any pressure on short sellers. They're able to cover for a profit. That's not a controlled squeeze. I mean, that's a hell of a euphemism. A controlled squeeze. That's when shorts cover for a profit, I guess. I don't know. I really think these hedge funds have figured out a way to slowly cover over time without causing a gigantic short squeeze. Well, But see, and this is a fundamental misunderstanding of what a short squeeze is. And I have said this for a while now. The apes don't actually know what a short squeeze actually is. They don't actually understand short squeezes. And that's not surprising. That's not surprising because the influencers don't either. I don't believe that they do. But they figured out a way to slowly cover over time without causing a gigantic short squeeze. Yeah, it's called short selling. That's short selling. That's the strategy. That is the strategy. But, you know, someday the apes will figure that out, maybe. They have it under control by abusing dark pools, unlimited synthetics, FUD, and delaying orders. Pretty easy to control it when you break every rule in the book. Oh, okay, EJ. And of course he agrees. But abusing dark pools. Okay. If you know that they're going to send your order off exchange, if you use this broker, then why would you use that broker? I don't understand. Unlimited synthetics. I'm still waiting for any proof of what a synthetic share is. FUD describes all this stuff. And delaying orders. Again, I don't know. That came from Lou. I have no idea what that means. And if they were breaking every rule in the book, I mean, I know that there's corruption in our country, in our institutions. And Wall Street, if you want to come down to it, they are corrupt, but only because they have so much money to play around with. And that's really what it comes down to in my eyes. If you have a lot of money, you can do shady shit. It's not illegal. But for example, if you wanted to do some bullshit, for lack of a better term, let's go to 1 minute chart. Like I'm going to show you how to manipulate a stock. Okay. So if you wanted to, it's not going to be. I mean, I guess I could probably find an example, but yeah, here you go. Okay. So let's say that you were going to cover a bunch of shorts, or you were just going to buy a lot of shares or something. And whatever the price is currently, like in the pre-market, and you're like, oh, okay, that's a pretty good level. You know, we could do this there. So if you have a lot of money to play with, if you have a lot of resources, and you're going to do a lot of buying, okay, it would be good to start lower. It would be good to start out, you know, at a lower level. So let's say that you wanted to buy, but before you buy, you dump a bunch of shares and drive the price down. How much was here? Let's see. 600,000, 300,000. So let's say 1 million shares. You short 1 million shares, get the price down, and then you start buying. For example, that's the kind of stuff you can do. So, but it's not illegal. There's no rule, there's no law that says you can't short sell before you buy. It's not illegal. You see a lot of stuff like that at the beginning, and I'm not saying that that's what's happening. I'm not saying that that's what's happening here. Or Or the opposite, the inverse could be true. You have a bunch of shares you want to dump. So, but before you start doing that, you make some purchases. Well, that did not work out. Why that looks so weird. Looks so weird when I don't want those gaps in there. But anyway, you make a big purchase, run the price up a little bit, cause some retail investors to buy in on that, and then start selling. Hey, if you have the money to do it, is it manipulation? Yeah, maybe. Is it manipulative? Yeah, probably. But that's a function of having some money behind you. And those are the things that I don't think the apes really understand or learned. Like, that's just the way our system is. That's the way capitalism is. The more money you have, the more shit you can do. And if you don't have a lot of money, you can't do it, but that doesn't mean that you have to get played by it. It means that you got to figure out what the hell, how the hell this game is played, and try to figure out some kind of edge, some kind of strategy to A, not get caught by it, and B, actually profit from it. So, but if they were breaking every rule in the book, like legitimately breaking the law every day, I mean, it's just, first of all, why would you participate in something like that? If somebody could get away with breaking the law every day, and you're like, hey, these guys are breaking the law, and they just steamroll you every day, and nobody cares, why would you continue to do it? Why would you think it would change? 2 years later, AMC, we are still moassing every week. Right. You can't time the market, especially a corrupt one. Greed. You can speculate, though. Yeah, but the problem with speculating is there are uninformed people out here who listen to speculation and they don't know any better. And ultimately it's on them to know better. But that's the whole reason, in my opinion, that you had so many people, again, buy in at these high price levels, and that's why, ultimately, every time this thing tries to rally up, which, by the way, is mostly short covering, it gets pushed back down. I mean, it doesn't get pushed back down. The price goes down because there are people selling. And that's a hard truth. July. Now it's July. Keep extending the dates. He doesn't even mention July 17th OPEX, quad witching. These AMC YouTubers are all clowns. GME will push to 250 by end of month and AMC 40 to 50. Just watch. Okay, the AMC YouTubers are clowns, and then you put out a ridiculous price prediction for AMC and GameStop. So who's the clown there? If it's controlled, it will never move up. Use some common sense. False. There's ways around that. No, it's not happening like Volkswagen. Elaborate. Simple. This time around, there is a tenfold on phantom shares. I mean, here we go. Hence, I said phantom, so you cannot fully account a buyback of all these shares out there if they legally do not exist. This play is not a one-stock play. This is a market-wide situation where in order to have a run-up on those many plays out there, there will be a need for a bailout or a viable economy exit digital credit backed by the U.S. currency. I don't even know what they're trying to say there. This is a Lou fan. I can tell you right now. This is somebody who's been listening to Lou. Now, if they somehow tracked every single share, both real and fake, then yes, this would go way past that. So for me, this will reach GME level on their first run before they rug pull this play and kill the momentum. Okay, you've already had the first run. That's the whole point here. It's the whole reason why it won't go back to that level. If they somehow tracked every single share, both real and fake, I mean, that's what the DTCC does. There aren't shares, there are no physical shares, but these are basically credits and debits in accounts at the DTCC. So they know how many there are supposed to be. I'm not sure. It would actually be interesting to find out more details about that in terms of settlement, clearing, custody. That's very, very, very dry information. That's, you know, more just a curiosity. But it's like that somehow they don't. Somehow the DTCC and the market in general, they just, you know, if they don't know how many credits or debits they've affected on a single stock, and it's like, yeah, okay, well, that doesn't make any sense. Think of it like a ledger or a spreadsheet. Yes, they can do that. They make the market, and they know when the computers will start tanking the market, so that way they place puts and make tons of profits. Remember what happened recently when it ran to 33 and it just got brutally halted out of nowhere. Got halted on the downside. So, I mean, these like basic facts. That would have been a clean 70 run again right there. No punishment for those that manipulate, and the people in this play are just desperately looking for what they want to hear so they can drastically change their life and ignore what's really happening. Okay, well, that part is, that's true. That's true. They are looking for what they want to hear so they can drastically change their life and ignore what's really happening. But, I mean, I would change the end of that. So they can drastically change their life and ignore how to actually profit in the market. What's really happening is this is Wall Street. This is the market right here. SEC is considering dude means they won't. So I thought that was you know, an interesting take, but just to kind of put a pin on the Volkswagen, this is an article that came out, let's see, in 2015-16 from a business school person in Australia, and they're talking about the Volkswagen short squeeze, and it's actually an interesting thesis. They look at price information from regional stock exchanges in parallel with the primary exchange in Germany, and they spotted variation in traded prices of Volkswagen in the different exchanges that show anomalies that happened about 24 hours before the Volkswagen squeeze. So they said that they find that the coefficient of variation in the prices at the regional exchanges is a leading indicator of the Volkswagen price spike. I haven't read this whole thing yet, but basically, just to kind of sew that up, the Volkswagen short squeeze arose after rival car manufacturer Porsche had built an interest of 74% in the company, in Volkswagen, including an undisclosed holding of 31.5% in cash-settled options. Porsche had earlier declared a milestone holding of 30%, as required by German takeover law, and the next update was not required until reaching 50%. Meanwhile, the option position did not require disclosure at all under German law because settlement by cash would not provide stock and therefore not provide control of the company. Delaying the disclosure of insider trades tends to increase the profit opportunity of such trades, and this was no doubt part of Porsche's strategy. Nonetheless, although Porsche could build its holding quietly, the option purchases would still cause observable upward pressure on the stock because of hedging. So then it talks about how they reduced the hedging costs by lending the shares for short sale, and shares were lent multiple times. Then they declared, let's see. The short interest, by the way, was around 12.9% of the stock, but it was a $15 billion short position in total, which AMC right now is, I think it's like $1.5 billion. $1.5 billion. So this is another thing that I think that gets lost in the laundry here. They look at the shares on loan, and it's 181 million. Hype that number. They look at the current short interest and say, oh, it's 120 million. Okay, big number. But if you look at the nominal amount, it's $1.5 billion. Like, if I had Ortex, I would go look at Tesla short position value over time, or if I had S3, let me say it that way, or some other data provider. But in the scheme of things, like, you know, I think it said somewhere here, or maybe it didn't. I think I read it was 15. Oh, well, it costs, but anyway. I'm not even sure what the float was on that, so. Okay, so then it talks about yada, 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 the price. So then Tuesday, October. And did he say July? I thought, did he say July or October? Anyway, and it goes through it here, but it was very much a different situation. And to say that, you know, this cycle thing, well, first of all, it was a different market. You know, it's listed on a different market. Now, there were American depository receipts, and, you know, so there was exposure to it, but it's just totally different. It's just a totally different situation. Okay, I want to get into this. So here's Trey addressing the AMC 100K comments. So let's see. I haven't seen this. I think this is clipped out of his live stream, maybe.
Well, yesterday I released a video that basically started World War III within our community. And although I admit I expected some form of backlash, it's definitely to the point now where at least I feel like I should address some things that you guys are concerned about. So that's what this video is.
He lost 2,000 subscribers in the last 2 days. Yeah, he's down to 389. He was 391 on Saturday.
Dedicated towards things that I find to be important and things that are important to me. There's a lot of different things I've read within the comments section, within Twitter. I'm going to address all these things here in this video. So if you want to listen, feel free. If not, feel free. These are the 7 things that I'd like to discuss. Number 1, right off the bat, price targets. See people saying, Trey saying that we should sell at $270. Trey saying that 270 is the cap, it's the limit. And this is extremely taken out of context. So what I did, and I'll show you again, just in case you missed it, is I pulled up a chart and I showed you what the equivalent of the move in June looked like. I said, hey, if you saw the exact same move that we got back in June based on Fibonacci levels, based on technical analysis, which is essentially just math, right? You would see this move. I didn't make this number up. It's not just a random number out of a hat, right? 272 is the equivalent of the June run-up. There's no part of that I'm lying about. If you see the equivalent of the June run-up, if you were to see the exact same thing twice...
I had to speed him up because this is still way too long. Coming from the king of 6-hour live streams.
$172. Does that mean that's as high as it can go? No. Does that mean I could be wrong? Yes. There's a lot of things here that can change, obviously. But this is drastically different than me telling you, or anybody, as I've never done, to sell stock at $270. I'm a TA guy. I'm a chart guy. I stand by that. And I think that when you see the move, it's going to follow some form of chart, you know? So that's why I laid that out. Want to make that very painfully clear.
Like, the problem I have is that he's still basically saying there's going to be a short squeeze. And, you know, it's so far beyond, like, the possibility of a short squeeze. That's not up for debate anymore. Now they're bickering about, oh, you can go to 100,000. No, it can go to 500,000. No, it goes to 1.2. No, 2.5 million. Like, guys, like, the most likely it's not going to happen anyway. So you're kind of debating the wrong thing. Okay.
Clear, that's the first thing on the list. Second, market cap. This is probably the area that that people are roasting me the most, is saying, Trey, market capitalization does not matter in a squeeze play. It's not what you're paying attention to. And I can agree with that to the most extent, right? Market cap is not important when you're looking at a chart and things are running up. It's not what you're paying attention to, sure, right? But I'm going to say two things. One, back in 2008 when Volkswagen squeezed, this was brought up to me in the comment section. I'd like to bring it up now. The market cap of Volkswagen hit approximately $380 billion, which after you price in inflation for the last 15 years or so, 16 years, is equal to just shy of $500 billion. Comes out to about $496 billion. Now, if you go back to my video, what you'll find is that lines up pretty much square on the nose with the market cap of AMC at $1,000 per share if there were no synthetic shares within the float. All that to say, right, that market capitalization does not mean this can't briefly hit X number. I'm not saying that in the least bit. What it means is market capitalization represents a massive amount of money that has to be generated to move a stock to the upside, right? What do I mean by this? AMC is not so simple, and neither is GameStop. It's not so simple as thinking about things linearly. You have to think outside the box here, right? There's money that has to come forward for synthetic shares, for regular shares, and
for synthetic shares, okay. All right. Money that has to come forward for synthetic shares. So these are the naked shorts that they didn't borrow. Okay.
And for derivatives. Derivatives are an immense market. And if you go back to January 2021, what shut down the buy button, to be frank with you, wasn't shares. It was straight up a derivatives overload. It was brokers not being able to handle the liquidity that was coming in and out of the derivatives market on all of those different tickers. GameStop, AMC, Bed Bath & Beyond, BlackBerry, blah, 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 blah. You go down the list. That was really what shut things down, was the derivatives market. And this is going to impact market cap, right? And that's this market cap.
We have a source for that. I'm not necessarily disputing it, but it's been so long since I've really thought about that. The January last year deal. I kind of have blocked it all out, I guess, but I'm trying to think. Was it in that SEC report? I'm not sure. Anyway, moving on.
Represent the money that was moving around in derivatives. This is a fraction of that. So to say that the money coming in doesn't matter, I don't know how we can make that argument. History would just suggest otherwise. I really do think that that's the case. And furthermore, as I mentioned before, there's a lot of fail safes that have to go. You kind of have to check mark your way past. And that doesn't mean being bearish, right? I can come out and have an opinion saying, hey guys, I am personally, this is the range that I think is realistic, and still think it's going to go up, right? This is just a differing opinion. And market cap, to me, is an important factor. Represents money that has to go into a stock to make a price realistic, even if it's for 1 second, one moment in time. And that's where I'll stay on that. Is it the most important aspect of a short squeeze play? No, right? Demand.
Yeah, but the problem is that if the short interest is 120 million, right? And I don't have my Thinkorswim open, because my computer, it's really a memory hog. But let's see. So I don't have the buy-sell data. But, you know, here's 226 million. And this is, so what was that, March 28th? Let's see if we can get to intraday on that. Maybe hourly, maybe, or something. But what, without like anything else, which is pretty much what's happening, what's been going on. There's not much else going on. Here it is. Like, this was a 226 million volume day, and it was a lot of buying. So what would 120 million shares bought realistically do without anything else going on? And again, that's the part of it where, like the comment, the hedge funds have figured out a way to cover without causing a short squeeze. Well, yeah, that's just called covering. It's just called buying. And that's what happens all the time in the market. You don't always have a short squeeze. And I think that is where maybe some of this confusion is coming from. It's ignorance about short squeezes and the nature of short selling, dynamics of short selling, long short dynamics. But you also had the part of it last year. You did have a lot going on because of the stimulus, because of COVID, because of everything that was happening last year. It's a different landscape. So I have to imagine that's a big reason why there's not a lot going on now, because it literally can't. It literally cannot be going on.
Supply shorts cover positions, synthetic shorts cover positions. There's a whole
But
bunch.
without the synthetic share bit, you're what are you left with? You're left with 120 million, maybe. That's estimated anyway. The last reported one was 108 million. So let's split the difference and say 115, whatever, 120. Fine, 120. That's why you need billions of synthetic shares, because 120 million without anything else going on would not even be this. It wouldn't even be this, because this is 220 when we don't. And I'm not saying it's all buying, but it was mostly buying. It was a lot of buying. You wouldn't even have this. You'd be, you might have this. So, and that's not a short squeeze. It's a short cover rally. But I don't know. That's why you need the synthetics. That's why they all they all push it, even though there's no evidence for it, because this whole thing, I think it depends on it. I think it depends on synthetic shares, that's fucked up, actually. That's very fucked up. The whole play depends on an ignorant assumption that has never been substantiated. I mean, that's fucked up.
Bunch of things that factor
Isn't it?
into it, but the driving home point that I tried to make here, and what's really important, is market cap means money, right? How much money does it actually take to move a stock to X price target? There is only so much money that circulates around unless you want to print more, in which case you can go back to that video and you can watch, and that's my opinion. Maybe I'm right, maybe I'm wrong, but that's my opinion, and I'm going to touch on this more so
fortunately it won't matter.
to groupthink, which is, maybe I should just touch on this now. 2.5 groupthink. Let me move this just a hair. Groupthink. This is a big thing. Now, I want to make this very painfully clear. I do not regret sharing my opinion. I am down. I've lost about 1,500 subs in the last 19, 20 hours. I've lost about 300 Twitter followers. And I wish you all well. I genuinely do. But here's the thing. My opinion, going against the grain, does not hurt my feelings. I'm not bought out. I didn't sell out. In fact, if I was offered, money from any hedge fund to
there we go, Lynn. He wasn't bought out.
All you have to do is go to the SEC, and you're going to make 2 or 3 times what they'd offer you anyways with whistleblower money. So it's just not even realistic. But the big thing here, and I think where we're running into some problems, is groupthink. I think that this community at times punishes those for thinking outside of the normal standard deviation. Sure.
Oh, really? Yeah, I can tell you something about that. But the thing is, he's not even really thinking outside the standard deviation. I mean, he's within one standard deviation of the ape narrative. He absolutely is. I'm like 2 standard deviations away from the typical narrative. So, I mean, but there is groupthink. I'm curious what he's going to say about it.
This is like, if you got a line chart here, and this is like where we sit, center, right? Maybe you get leniency about here. A little bit out of the norm, and this is the norm right here. And if you step outside of that, I think that you typically get some backlash. And I'm okay getting that backlash because this is a cultural change that I'd like to see genuinely within our community, is the opportunity for people to come out with opinions and with thoughts and with research and express these things without people basically just losing respect for them and trying to out them from the community. You don't have to agree with me. You know, I don't want you to agree with me all the time. I want to spark conversation and spark thought. And that's genuinely what I thought that video did. And obviously, to some extent, it worked because it got a lot of views and has gotten a lot of engagement and a lot of conversation on Twitter and YouTube. You know, so I guess we've met something there, but this is something I think we really have to think about down the line. Geometric mean. This is an idea that Review Dork has brought forward in the past when he made his video talking about AMC 500K. And the premise behind it is that you're going to have basically popcorn selling along the way up, right? You're going to have some people that sell at 50,
popcorn
100,
selling.
150.
Okay, yeah. That's overhead supply. And it's I mean, it's really moot because it assumes that it would get past, like, I don't know, $20, $25, $35. Like, oh, people are going to be selling at 100. Well, yeah, people are going to be selling at fucking 30. So, yeah, good job, Review Dork, on that one.
110. And this is referencing if you were to go up to 100K, right? Maybe 1,000, 7,000, 12,000, 18,000, blah, 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 blah. It goes all the way up.
What about the trading? What about the limit up halts that would happen? That's something that never gets addressed either. Like, they were crying about a halt on going up to 33, even though it was on the way down from 33. But how would it literally go up that much without being halted, like, constantly? I don't know. I guess it's possible. All things are possible.
Basically, the geometric mean of all these sell points, you get sort of like a centralized price target. I think his for 100K was like $1,800, right? He said, hey, if this was to hit $100,000, the geometric mean sell point would probably be about $1,800, right? Now, this is all said and done well in a perfect world where AMC hits $100,000, right? And I've seen the argument. I've seen what you guys have said. I've seen people say, well, it's probably just going to do this. If this is 100K right here, it'll tap it and then it'll go down, right? But the point of that video, I don't think that was grasped. I think the point that I made was
Trey.
I do not think $100,000 a share will happen. And I'm not backing down from that. I think that I can be bullish and I can stand for what you guys stand for and have a different expectation than you. And we can be on the same team without me thinking that $100,000 a share is going to happen. I think that's the honest to God truth.
The apes are like George W. Bush. The apes are like President George W. Bush. You're either with us or you're with the terrorists. So you either stand with us or you stand with the hedgies. Period. That's how it is over on Reddit.
I would bet my left nut that it would not happen. I'd bet it, and I'll you hold me to it. All right. if we had $100,000, I will. If any of you apes are a doctor, I will sit down on a fucking chair, and you guys can remove my left testicle, and you can.
How about we just do a regular fucking bet with money? I'm sure, I know, probably have some people in this community, in my little clan, that would be willing to put up some money. I would put in a couple $100 against Trey. You could even leverage it, and even go three times leverage in his favor. But, you know, no need to go all dramatical, you know, with your manhood there. But I mean, I don't know. I'd put money on that. I would put money on the fact that it's not going to 100,000, or that well, I guess we're on the same side there. But I will bet Trey. We'll bet Trey that there will be a squeeze. There you go.
And make your $30,000 profit, whatever you could sell a left nut for. I'm down for that because everyone's gonna be walking away freaking fantastic. You know, the economy, on the other hand, different story, but we don't have to talk about that. I mentioned that yesterday. Geometric mean is a useful tool. I agree. And in an instance where, like I mentioned yesterday, my realistic expectation would be maybe between 1 to 2K, right? I think this is a lights out spectacular growth from the low of $3 that we saw back a year and a half ago, right? In this situation, I don't know what the geometric mean would be, maybe a couple $100, maybe 300, 400, 500. But geometric mean is very useful. This would tell you where the average person would likely sell. But 100,000, I don't still think we can base it off of that. I just don't. The math doesn't make sense to me. I'm using market cap. I'm not backing down from that because this to me represents at least some form of liquidity that we can measure to show how much money it would take to reach that price and how many people we'd have to fail safe along the way to reach that price, you know? Which brings me into the options, derivatives, and market makers. If you look back to January of 2021, what happened? It took away the buy button. Why? Because many brokers had an overload that they could not transact. They didn't have enough money on their books. They didn't have enough margin on their books. Robinhood was the first of many to sort of shut things down, right? They said, hey, we got to remove the buy button. We can't handle these transactions, so to speak. Now, I think there was more behind that. But a piece of it at the very least was they could not handle the amount of liquidity that was moving around on that particular day and the previous couple of days. And if that was a problem with $25 for AMC, 500 for GameStop, and we're looking at this number, 100K, how are they going to do it? You know, I don't see how it would happen. The options derivatives chain has such massive amount of leveraging and liquidity that moves around within it. I mentioned this yesterday. It's $1 quadrillion, right? It's a lot of.
The good news is the option volume is way lower than it was last year, so it probably wouldn't be a problem. But I mean, I guess that's a fair point. But you're not seeing the volume that you saw before.
Money, and this isn't all realized money, so to speak. This is leveraged money, meaning that maybe $1 is actually going for
Why
on
did
the
I
market
slow
like
that back down?
5 to 10.
I have no idea.
Right, so a lot of this is leveraged money. It's hypothetical money, so to speak. It's money that's not actually printed and tangible, right? So at the end of the day, let's just hypothesize that you were to take a huge chunk of this $1 quadrillion hypothetical money and put it into sort of the options chain and allow people to get paid out, right? Hypothetical money and leveraged money is great until you have to have tangible money and money you can put in the bank. So how would you accomplish that, right? Money's got to come from somewhere. I went over the numbers yesterday. I'm not going to pull them up again. You can agree with it. You can disagree with it. But my opinion is it would require a lot of fail safes along the way to make a decision to allow it to keep going. And maybe it's cynical of me to say, but I think that you would witness along the way. I think it'd be drastically before this. I think it would be along the realm of maybe, I don't know, $500 to $2,000. I showed you guys fib levels for 270. I think even that would be okay. But along the way, I think people would step in. I just do because of overload. I don't think they'd have enough money to handle those transactions. Sellout, I addressed this. You can believe whatever you want. I'm not here to convince you either way. If I was offered money to sell out, I would just take that to the SEC and I'd make double or triple whatever they offered me. 100,000, touched on it. I want to close on this.
Well,
I don't want to make this a
I don't know
video.
if that's true.
Yesterday I was on Twitch.
I mean, I don't know what the SEC whistleblower rewards are these days, but I can tell you that Wall Street has way more money than the SEC does to hand out. So I don't think that's really exculpatory, but, you know, whatever.
And a guy stopped in, and I was gaming, and in a video, offered me 100,000, touched on it. I want to close on this. I don't want to make this a 20-minute video. Yesterday I was on Twitch.
It's only a 14-minute and 58-second video, Trey.
The guy stopped in, and I was gaming, and he said, Trey, I lost all respect for you with the video that you put out yesterday. I can't believe that you would turn your back on apes. I can't believe you would turn your back on retail investors. I'll never respect you again. And I want to talk about this because this is a point that I want to make. A very painful point. It honestly makes me a little bit sad. If you respecting me is deriving from the opinion that I share, you never respected me in the first place. If I share an opinion that you don't necessarily agree with, for in this instance, what I think is a realistic price target, which is a pretty normal thing that I think we should be able to discuss, and all of a sudden you've lost respect for me over a number, you never respected me. And to be frank, I don't want you in my corner.
Okay, now, right, says Mr. If you sell, you'll regret it forever. Right. And I would add, says Mr. I made $1 million on options. I made $1 million on options. That's what he said to Benzinga. But, you know, I mean, let's just let bygones be bygones for a moment. What he's touching on here is a valid point, I think. Taking him out of the equation, taking this situation, you know, just in a vacuum, the apes don't know how to listen to opposing viewpoints. And this is something that we've been saying and dealing with since we started talking about this stuff last July. So, but, it, you know, the irony is, of course, is what Lynn is touching on, that at the time when we started talking about this stuff and saying basically what he's saying, that, you know, it's ridiculous that you can't go on the AMC stock subreddit and respond and comment on one of these things with actual facts without getting totally flamed and probably banned from the subreddit now, for example, or commenting on a video and then having, you know, a bunch of hateful replies. And it almost has like a political, it almost has like a political feel to it, where if you're, you know, supporters of this politician, you know, don't like the supporters of that politician because of, you know, whatever the perceived differences. But at the end of the day, I mean, and I'm speaking on Trey's behalf here, Trey and the apes have a lot more in common than they have differences, at least as far as what Trey portrays to the, you know, to the community. Now, having said all of that, I think Trey is 100% full of shit. I think he knows that this is a bullshit play at this point. He knows, because he's already made his money. I'd be surprised if he even has a position. He has to know that this shit is not going anywhere. I wish he had the balls to say that, but I guess he doesn't want to lose all his subscribers. But I mean, if he had, maybe this was Trey testing the waters. Maybe this was him floating a trial balloon and saying, all right, well, if I put out 100,000 is not possible, what will happen? And now, for sure, he's probably not going to, you know, probably not. That's probably not what happened or why. But, you know, but at the end of the day, yeah, it is kind of bullshit that anybody would put out an opinion. I mean, let's just use me as an example, right? I put out more than opinions. You know, I just actual factual explanations of things that are completely misrepresented by people like Trey and the ape community. And these aren't opinions, they're factually based explanations, like OBV, for example, on balance volume, or options, option chain, option hedging, stuff like that. This stuff is based on facts, and I try to do the best job I can to make it easy to explain and based on, you know, observable evidence-based. And people don't want to hear that. So if they don't want to hear something that's based on fact that disputes their already held belief, they certainly aren't going to want to hear an opinion that's not proven by fact. And even further, like down this rabbit hole, an opinion about something like the MOAS that's not substantiated by fact at this point. And he has an opinion which is not substantiated by fact about that unsubstantiated event. Wow, that's confusing, but you see what I'm saying, I think. But Trey is entitled to his opinion 100%, and it's, it is bullshit that the apes can't hear somebody say something that they don't agree with, and their first inclination is to say, fuck you, you're a traitor, I'm unsubscribing, fuck you, I hope you die. That's over dramatization, but at the same time, in Trey's specific case, I don't care because he is a grifter. So it's complicated, but I'm trying to separate the concept of someone expressing an opinion that's different from what a lot of people believe from Trey expressing an opinion about something that is unsubstantiated, not factually based. So it's complicated, but I agree that Trey is entitled to his opinion. But at the same time, I don't care about his opinion, because he also holds the opinion that that AMC is going to run up and there's going to be a massive short squeeze to $1,000 or whatever he believes. So hearing Trey get all holier than thou is like the devil chastising you for being evil. So it's like Ken Griffin chastising you for being evil, because that's the devil. Ken Griffin is the devil. That's the devil right there. Model 3 dude in the house. Hello. What is up, man? I feel like Trey is saying, I didn't know you were all taking me seriously. Maybe, yeah. He's setting up a situation so when this all crumbles and the apes finally wake up to reality, he can say, I've been telling you to temper your expectations, hoping the apes forget it was him who gave the prediction or something. I'm sure. Looks like the end of it got cut off. Oh, it gave the apes their crazy ideas. There it is. Right. He never had to have any facts. Oh, yeah. He never had to have any facts because there were so many voices screaming that he just rode the wave. There it is. Yep. He never had to have facts. Wow. That's a great way to put it. That is a great way to put it. And he didn't have to have facts because back here he was saying that it was going to go up and whatever else, right? So and then it did. And so he had this credibility that was substantiated, at least in the ape's mind, because he was predicting this or whatever. But then after this, here, that's when really the grift started in earnest, in my opinion, was, don't sell here. You'll regret it if you do. You'll regret it the rest of your life. That's really where the grift started. So, and that was the wave. The momentum was already moving at that point. Trey decides to speak about AMC now after he made a lot of money. Yeah. I mean, I still can't believe, not even that Trey made a lot of money on trading AMC options. Like, I don't think one can really be upset for somebody for profiting in the market. Like, the market doesn't care. It doesn't matter. It's not like you're taking money out of somebody else's pocket. That's not really how it works. So the goal is to make money. And so in that sense, like, yeah, more power to you, man. You made a shitload of money. That's awesome. But what I can't believe is that he never really disclosed that to his audience. His audience found out about that from a video, an interview that he did with Benzinga. And that, to me, is a slap in the face. If I were an ape. It would... So, he said in that video, yeah, I made $1 million. did he ever say that to his audience? Did he ever come out and say, hey guys, guess what? I made $1 million in profit trading AMC options. Here it is. No, he didn't. And I'm not even saying that he should have. But what I am saying is that he sort of, in that sense, he hid it from the apes because he knew that if he did say it, he would have had this backlash then, which honestly he should have done. He should have done it because then he would have lost the credibility and this whole thing. I mean, it still would have gone on, but you would have had one less voice pumping all this fraudulent information out there. And so that's the problem when people lie or lie by omission. It creates these situations that are kind of not really supposed to be. And that's kind of the way I feel about that. But the problem is, that's an inherent problem with this YouTuber, influencer, finfluencer model. Not everybody, even if you put out all your trades, like tweet them or whatever, put them out in your Discord, even if you do that, people will not make the same money that you make. They won't be able to it's not really a valid strategy, in my opinion, following someone's trades. It's a reactive strategy. You have to be able to react to the market yourself. If you're waiting for somebody else to tell you to do it, you're going to be too late. And that's cheating in a way, in my opinion. It's kind of cheating. So it's not really valid. It's not going to work. I don't know if Trey does that in his Discord or what, but I'm just saying that there's not really a way that he could have done it and be on the up and up, because there were so many people in this play that were going to be bag holders no matter what. And that's just the reality. And it's, it sucks, but that's the reality. Some people were always going to lose everything. Even if there were this massive squeeze now. Because look what happened last time, and some people are going to miss it. There's just a variety of reasons, but you're going to have people that are holding because they think it's going to keep going up and up and up. And that's what happened last time. But the difference this time is every time there's a rally, it gets sold. It gets sold down because you have people at these high levels. I'm like a broken record on this, but I think this is the best way. I want it to be on record that I've said this overhead supply over here, that of all these people, overhead supply of bag holders, that's what I'm calling it. All this buying here equates to all this selling here. Oops. Oh, come on. Trading view. What the hell? It's stuck on the line. How do I get that off? That's dumb. All right.
I just don't. I think that we need to be able to have these open conversations so that we can move forward and progress as a collective community. I genuinely believe that. To grow means to be uncomfortable. And if I have to be the
So this is not clipped from his live stream. This is just him like, okay, so he took the live stream down. Oh, what a bitch. What a little bitch. You're being a little bitch.
Punching bag to allow growth to happen. I'm okay with that because I give a fuck about you guys. Nobody else is saying this stuff. Why? Because it's an uncomfortable conversation, because there's not YouTubers out there that want to have the conversation because they know what would happen. I'm telling you right now, I've had conversations.
Ooh, I'll tell you what, Trey, I would have a conversation with you and it would be civil, but it would be the hardest conversation of your life that you ever had on stream. I can tell you that right now. Oh my God. Holy shit.
Is behind closed doors with other YouTubers expressing the same concerns as me.
Oh, wait a minute. I have to hear that again.
It's an uncomfortable conversation because
I'm just going to go back because I know I stopped it.
Agree with, for in this instance, what I think is a realistic price target, which is a pretty normal thing that I think we should be able to discuss. And and all of a sudden you've lost respect for me over a number. You never respected me. And to be frank, I don't want you in my corner. I just don't. I think that we need to be able to have these open conversations so that we can move forward and progress as a collective community. I genuinely believe that. To grow means to be uncomfortable. And if I have to be the punching bag to allow growth to happen, I'm okay with that because I give a fuck about you guys. Nobody else is saying this stuff. Why? Because it's an uncomfortable conversation, because there's not YouTubers out there that want to have the conversation because they know what would happen. I'm telling you right now, I've had conversations behind closed doors with other YouTubers expressing the same concerns as me.
Damn.
I give a fuck about you guys.
Damn.
That's what I got. Catch y'all later. Much love, Light Taps. Peace.
Damn. Trey's destroying this community, and it's fucking great, I have to say. It's fucking great to see. He is fucking destroying this community from the inside. Oh, shit. Trey's video is a kick in the ape's nuts after the SEC meme video. Oh, man. So I wonder who he had those conversations with. Who does he talk to that is another YouTuber? I mean, he and Matt used to be, but I don't think they're an item anymore. So he's saying that the highest AMC will go is 272. He mentioned 272 was the most likely. He still think it can reach 1 to 2K. TMI. So what he did was to get to 272. Oh my God. Okay. I'm just going to switch and see if it... Okay. I bet it'll still be... Okay, good. He did a Fibonacci retracement from somewhere down here. I don't know why it has that dot on. Anyway, he did a Fibonacci from here to the run-up, and then what he did was he did the same... I think he did the same Fibonacci over... What the hell? Fucking trading view. I don't know how that happened. I can't scroll over for some reason. Oh, there we go. Well, and he did the same. So he found the Fibonacci level that it went to from here to here, and then he superimposed it over here, and that took it to 272. He said, I don't really know if that's accurate or not, but anyway. Yeah, I'll play that clip, Manny. So here's part of it. This is from part of the live stream, I guess, right? That Marantz Rants put out. And I did see this. I was driving home. I saw it. I was watching it in the car. I watched it a couple times because I didn't realize, like, it was just confusing. But
you
anyway.
interviewed AA multiple times on your channel. You pushed his exploit with the power of YouTube. You created bag holders. Stop the nonsense. Says Marantz Rants. See, what I did, Marantz Rants, is share information that I found to be important. Right? I have never, you can go back on all my videos. You'll never see me screaming 100K. You won't. In fact, anytime that people did bring up 100K, I shied away from even...
I don't know if that's true. I think that he probably removed him where he did, but... You
can go back on all my videos. You'll never see me screaming 100K. You won't. In fact, anytime that people did bring up 100K, I shied away from even answering it. I'd read it out loud and be like, it'd be hard, you know? And that's for a reason. It's because I've tried my best to ground myself as much as possible and keep things straight. Have I done everything perfect? No. And I would be the first to admit that 10 times out of 10. There are things that I haven't exceeded on, fucking crushed it on, right? I don't deny that. But to say that I pushed his exploit doesn't make sense to me. Adam Aron pitched his own interview. He'd come into it and he'd say, these are the things that I'd like to discuss, and we'd have a conversation about it. I don't answer for him. I ask questions, he answers. That's it. I'd run by him. Hey, I'd like to ask you these things. If you'd like to talk about these things, that's cool. Just run it by me. We'd have a conversation live. You guys would just watch it. And that's it. That's all I have to say.
All right, guys, I'm going to give you guys some context about this video. Trey, during his live stream, said that the squeeze from last year would have happened without retail. And I about fell out of my chair. He says, without YouTube, I should say. He said, no, YouTube didn't help the squeeze of last June. And I was like,
what? Well, that's bullshit. Probably, right? I mean, the YouTubers were an essential part of spreading this, right? That seems like a stretch.
Like, is he serious? Because I've yet to see an interview from Aron other than to keep people in the damn stock so that he could sell it from underneath them, him and all the insiders themselves. But without Trey.
Yeah, when was the first Aron interview? I mean, it was after the run-up, right? In June. I'd have to look, but I never thought about that.
Pushing Aron to the interviews. Oh, no. Aron contacted him to use it. So, you see, there's a vehicle here. The vehicle in the same common denominator is Trey. Trey has been with the Wolf of Wall Street. He's done this interview. Every interview he's done, guys, is for one, to get more views. We get that part. Because this is his career now. This is his livelihood. But you don't just get to wash your hands of it. Come out with the video and say, well, now I'm realistic with the totals. Because last year, you were saying it's going to the moon.
The first one was from April 14th, 2021, I believe. So
honestly, literally going to the moon. What is the moon? You wouldn't even say the price, because when people are saying 500K AMC, 100K AMC, there's reasonable people out here who are saying it's never going to get there. But, Trey, now you say 240. Oh, you penciled yourself in. You boxed yourself in. You could say $100 you boxed yourself in. Tell me how. Without the power of you and YouTube, I don't see this going anywhere. But I wish you all the best of luck. I really do. This young man had created bag holders, and people.
And then the second part of the interview was on June 3rd, 2021. June 3rd. This day right there. Come on. This day. I knew one of them was right around there. So that's interesting.
But I wish you all the best of luck. I really do. This young man had created bag holders, and people lost thousands of dollars.
That's true.
That's unfortunate. I'm sorry, millions of dollars. Peace.
So, yeah, the second interview with Aron was on June 3rd, 2021. So that's interesting timing. So then, let's see here. Let's see. Oops. So we have information about the SEC whistleblower thing that Lynn gave us here. So this is press releases. I thought Trey was going to be on here or something. So this was an award of nearly $3.5 million to 4 whistleblowers. And they've awarded approximately $1.3 billion to 273 individuals since issuing its first award in 2012. It's probably still low by Wall Street standards, but yeah. Okay. Point taken. It's probably more than he made on his options. Let's see. Everybody's coming for Trey now because they're mad. They lost all their money. Trey and Matt sold. Made a lot of money. Review dork. Yeah. Right, Model 3 dude. There's no way that works because it retraces with the aid of past performance. Right, and you know, like I've been saying, like I've been screaming about here the last few days, you know, now you have sellers who bought in at these levels. Before, you didn't have sellers. So, you know, it's just a totally different situation. Not to mention, this move up was aided or made possible by retail having a shitload of money. I'm gonna have to refresh this because it's not letting me drag it around. It's annoying. But it's just you know, it's just a totally different climate. That's what I would say. It's a totally different economic climate. Trey and Matt did the smart thing by selling, where they acted like scumbags, was telling them telling their communities to buy and hold, while he and Kohrs sold and made profits. Yep. Then Trey and Kohrs basically manipulated misinformation and misrepresented info to their communities because they wanted the views and donations. And that's it right there. You know, and I was thinking about that earlier. It's like, and I was watching the Roensch Capital's video, and it's like, he literally started saying, I'm just a guy on YouTube like everybody else that's, you know, on YouTube here. And I just care about the community and I want to blah, blah, blah. And it's like, no, that's not why you're here. That's not why you're here. You care? You want to help? We watched one of his videos from last year, recently in a stream, last couple week or so ago. And he's just as bad manipulating information and misrepresenting information to his community and taking money and charging way too much for fucking option alerts and shit. And they say they just want to help. Well, if you really wanted to help, you wouldn't be a fucking permabull grifter, because there's no way that 100% of information that comes out is bullish for a stock. It's just not possible. It's not realistic. It's not possible. It's not true. It's fraudulent. Nothing, no stock is bullish on everything that comes out. It's ridiculous. And that's what these guys were doing. Matt hasn't made a video in Trey's defense. He's minding his business and living his best millionaire life. I suppose so. I suppose so. Wow, AMC is still heavily shorted. What is going on? Matthew Perry. Oh, God. You know it's bad when he comes out of the woodwork with some bullshit. Will the market crash cause the AMC squeeze? Well, hasn't this year been an indication of the fact that the answer to that question is no? I mean, seriously. 200 million AMC shares borrowed. Oh, really? Where are you getting that from? I can't do that. I can't do it. I can't do it. But I do want to do this. Oh my God, short the VIX. Infinite short interest glitch. Infinite short interest glitch. Oh my God. They love the idea of infinite things. They can understand. They can understand something that just keeps going forever. That the apes can wrap their brains around. I mean, that's sad. It's fucking sad. Infinite short interest.
What's going on, guys? Welcome
What's
back
going
to
on,
video.
guys?
In this video, I've got one of my most important AMC videos that we are going to be doing this evening. So we have a lot of important concepts to cover, but we are going to be covering what we're seeing on the technicals for AMC right now on the longer time frames to give us an indication of where we could be headed over the next couple of trading days. In addition, the ortex data for AMC and GME are getting
absolutely crazy. Everything's crazy with this guy. I'm going to call it now. He's going to say there's a boatload of shorts. Boatload is going to make an encore appearance in this fucking video. I can feel it.
Absolutely insane. But there's some key things here that we need to understand before we talk about this concept of infinite short interest or infinite shares on loan, and why we may not be seeing the increase in cost to borrow that we are expecting. There's a very, very simple explanation for this. And when we go through the logic here, retail investors...
If he uses the shit that I talked about on the live stream last night from S3, then I'm going to know that he watches my videos.
Simple explanation for this. And when we go through the logic here, retail investors as a whole, if this kind of plays out and retail investors are the ones whose shares are being rehypothecated, retail investors hold the keys to a very, very substantial forced share recall. Now, in addition to this, we are going to briefly touch upon some of these tweets in this article that was released today about what the SEC's actions are going to be over the next couple of weeks and months about kind of market reform and retail investor orders.
No date,
so
Super Tramp.
Before we get into all of that information, if you enjoyed the information and analysis that I provide for you,
we don't do dates here. We don't do dates here, okay?
People who want to learn. And if you guys want to in the Discord, we are working. Stop want to be grandfathered in before the price increase after the 4 hour.
Listen to him talking about increasing the price of his fucking Discord.
Which I think is going to give us probably the best picture of where we're headed on AMC right now.
Yeah, whatever, fuck you.
Now again, this stock, AMC, GME, they move crazy. It's very possible that they just decide to have a mind of their own and start ripping, but this is kind of what the chart is telling me at
okay.
This stock, AMC, GME, they move crazy. It's very possible that they just decide to have a mind of their own and start ripping, but this is kind of
decide to have a mind of their own and start ripping. Well, that's not how it works. But when you've told your community that shorts haven't covered, what else? What other explanation is there? We know that retail's not buying. Retail doesn't have the fucking money. We can see that in the volume. So the only other explanation is it gets a mind of its own and starts ripping. Okay, this is the guy I want to trust. Jesus.
What the chart is telling me at the current time. Now, when we come over and take a look at the ortex data here, let me just give this a quick refresh for AMC. There's a couple of key things that I want you guys to focus in on. The first, we have 23.31% estimated short interest, very high. 120.18 million shares estimated to be sold short, which I believe is an all-time high. 13.72% average cost to borrow.
Well, you literally have the data in front of you. Why don't you look it up? Why don't you look at the fucking chart and see if it's all-time high? Instead of saying, I believe it's all-time high, yeah, it's a boatload.
19.21% max. Now, when we look at this on-loan situation right here, the shares on loan for AMC, when we go all the way back to June 7th of 2021, the percentage of the free flow on loan, yes, it did increase back here, but this is the actual amount of shares that are on loan. Well, we're skyrocketing to all-time highs right now in terms of the amount of shares on loan.
Oh, my God.
Right now, it's 181.87 million. I think free float on loan is the actual one that we want to use here. Yes, so this is going to be the percentage here, and we can see that this yellow line...
He even sucks at ortex.
Percentage of the free float on loan.
He's been looking at ortex every day. He's made videos with ortex every fucking day.
Let me see if I can get this to highlight up here. Is really, really significant, and we see this number right here, 35.28%. Really, really substantial numbers of the percentage of free float on loan. But why aren't we seeing the cost to borrow get as high as it was as in last year when we were seeing this amount of short interest, this amount of shares on loan, this percentage of free float on loan? And we are going to cover that in a couple of minutes.
Didn't he just say that it's all-time high? So why would it... Jesus Christ.
Now, when we take a look at GameStop short interest right here, 28.81% estimated short interest, 177% average cost to borrow, 261% max. Again, these stocks short interest data right now is absolute.
So I don't believe these numbers because it says cost to borrow right here. It says current 45. But down here it says cost to borrow average 177. But of course he's going to go with the larger number because, you know, super bullish. I mean, let's not, mention, maybe he will mention the short interest was, it's basically unchanged.
Insane. Now, quickly, I do want to take a quick look at the
options. That's it. That's it. That's literally it. Oh, yeah. So I'm left with a super bullish boner right now.
See,
God
before
damn.
we get into this infinite short interest, infinite shares on loan, and the keys that retail has right now, in kind of figuring out potentially a way to force share recall or force a recall of a lot of these shares and force a lot of these shorts to get out of their position. So when we look at this data right here, for the monthly for June, it's not looking too good in terms of the options chain. Now, there is a potential for a gamma.
Well, why not, Shart the VIX? Oh, could it be because a bunch of dumb apes bought calls? Out of the money fucking calls? Because they were told by a guy named Boss Blunts that June 3rd was going to be the day. Oh, but no. Now it's Monday. Well, now is he saying Tuesday? Or is he giving himself a whole week now? Seriously. Where's Boss? Or did he run away with his tail between his legs yet? Jesus Christ. Yeah, out of the money, 300,000 fucking calls. Pathetic. Stupid.
All these
uninformed.
126,000 put contracts out of the money, and a lot more of these 262,000 call contracts in the money. Again, the option chain for July looks pretty crazy right now, too. So there are 2 months in a row that we do have a decent potential for some pretty significant moves to the upside.
This is meaningless. Oh, look, there's a shitload of money. There's a shitload of calls out of the money. Oh, look, there's a shitload. Great. What can you glean from this as an analysis? This is a fucking bullshit analysis tool. Seriously,
now,
it's bullshit.
Let's get into what we talked about in the title of this video so that you guys fully understand what we're seeing here. So first, this is going to be an illustration of how the short interest could potentially be infinite. Now, we're seeing these crazy short interest numbers on Redbox right now, which is like 160% shorted. But let's just go through this example very, very quickly and make it really easy for you guys to understand. So investor...
Because he knows that the apes, not the smartest, not the sharpest crayon in the drawer.
They own 100 shares. This could be me, this could be you, this could be any retail investor. Now, investor A's broker loans out the shares to hedge fund A. Now, I know a lot of you guys have seen this example before, but there's a very, very key thing in here that you guys have to understand. So now these shares have gone out on loan to the first hedge fund. Hedge fund A then sells these shares. The key thing here is, or the majority of these shares to investor B. The reason why we are saying the majority of these shares is that when we take a look at the shares on loan versus shares estimated to be sold short, there's about a 60 million share difference on AMC right now. So we just want to account for that difference. And that's
you want to account for the difference in an estimated fucking data source that only uses 80 to 85%, that only gets 80 to 85% of the data. It doesn't get all the data. Oh my God. This is retarded.
Where potentially this rise in cost to borrow has actually come from. Now, investor B's newly purchased shares will become immediately available to lend after the settlement of these shares, which keeps supply and demand relatively stable in the securities lender market. Now, this is possible if investor B has share lending turned on. Cost to borrow increases, but not as much as we expect. The reason why the cost to borrow would increase is, let's just say that hedge fund A only sold the majority of those shares.
Which keeps supply and demand relatively stable. Okay. All right. This is like, you can oversimplify something and take any fucking detail and information and explanation out of it. That's what he's done here.
To investor B. So there is still going to be a decrease in the overall pool of the amount of shares that institutions are willing to lend right now. But there's still basically that rehypothecation aspect where the same shares can go out on loan.
That's not rehypothecation.
Now, this process can go on indefinitely as there's more people buying shares, more shares going out on loan, more people continually buying shares, and the process goes down. Now, institutions can play in this too.
You've said nothing. You've said nothing. Start the VIX. Clowning it up, as always. The only thing we need now is that BNY Mellon article. I swear to fucking God, if he shows that BNY Mellon article, I don't even know.
Very big way. Institutions loan shares, but let's say they are buying, as many more have already done. So let's say BlackRock, with their giant share position, is loaning out a significant portion of their shares, but they are still buying more shares. So it's possible that they are, quote unquote, buying the same share twice and also loaning it out twice. So what we're seeing here is a balancing act in the securities lending market where shares are coming in and out, is still buying more shares. So it's possible that as many more have already done. So let's say BlackRock, with their giant share position, is loaning out a significant portion of their shares, but they are still buying more shares. So it's possible that they are, quote unquote, buying the same share twice and also loaning it out.
Where the fuck did he come up with that? I mean, is there any factual basis for this? Or is this just him, like, sitting in his room, like, well, you know, BlackRock could be buying the same shares twice. What the hell? Oh, my God.
So what we're seeing...
Furthermore, who fucking cares? What action item is there for this? What actionable item could possibly come out of this? I can't wait to hear.
Is a balancing act in the securities lending market where shares are coming in and out of basically the institutions, let's just call it their wallet or their kind of backlog of shares, that is keeping these metrics kind of in check, just specifically for AMC right now, which is why we haven't necessarily seen the massive skyrocket in the cost to borrow with 35% of the free flow on loan. Now, here's where the forced share recall comes in that I want you guys to understand. So, if this is going on right now, and it is retail investors who are allowing these shares to go out on loan. Remember, if you are in a cash account and if you have not...
But he was just talking about BlackRock loaning shares. He was just talking about BlackRock. This is all over the place. Oh, my God.
Your broker to not put your shares out on loan, they are doing it. So if you do not want your share to be used against you, loaned out, sold, and essentially dilute the overall share price of AMC, then that is something you should definitely consider trying to turn off. Now, here's where the forced share recall comes in. If retail investors were the ones that were letting these shares slip by and going out on loan, if a massive wave of them then just decided, hey, I don't really want my shares out on loan anymore, and they turn off share lending, well, those shares are going to be recalled and put back into their accounts. What this process starts is it doesn't start from up here. It starts from that infinite number way down the line where investor A goes to investor B, goes to investor C, D, and down the line. So it would start from the bottom and go all the way back up as those shares are getting returned. So you can see the potential of this situation here if this is why the cost to borrow is not going up as fast as we would expect it to. So if you guys have any questions on that concept...
It's not going up as fast as you expect it to because your expectation is based on complete bullshit. Your expectation is based on the fact that you think the stock should be and can be and could feasibly be and should be and will be $100,000 per share. So that has clouded any expectation of anything else. I mean, this is garbage. I can't believe he didn't pull up that BNY Mellon article. Here, I honestly can't, because he's talking about share recalls.
Make sure you drop a comment down below. Now, I did briefly want to talk about this SEC situation and kind of give you guys a quick breakdown here. So Walter Bloomberg tweeted out this article right here, but the headlines are really the important things. The SEC could issue proposals on key stock market related rules this fall, sources say. Coming down a little bit further, this is the important tweet right here. The SEC weighs pushing retail investor stock trades into competitive auctions. The competitive auctions part is very, very important.
Ooh.
It is no longer necessarily going to be who is going to pay the most for the retail investor order flow, but it is going to then be who is able to give retail investors the best execution price, which is everything that we have wanted all along. Now, again...
So if you get that and there's no MOAS, then what? And this is one of my favorite hypothetical to think about. If these types of market reforms actually go through, but there is no short squeeze, what do the apes do then? what do the apes do then? It would be fantastic to be able to find out. I'm not putting any faith in that whatsoever. I'm not putting any faith in the fact that Ken Griffin will be shut out of the market. I mean, that's just it's absurd, really. In my opinion, in my mind, it's not going to happen unless I don't even know how you do that. I mean, it would be a new major regulation. It would be like another Reg NMS or something. It would have to they would have to reform that. They would have to totally change the structure. And by the way, it was out of that regulation that created the Reg NMS that basically it was after that high frequency trading really became what it is now, not because the regulation addressed it or anything, but it was more of a byproduct or a side effect of the way they set up the structure in that regulation. It's something really interesting I've been reading and learning about, and it's really complicated. But the one thing I have taken from it is that the high frequency trading market maker model came out of that. So, but that's not what the regulation intended. That's not what the regulation even really put in place. So all I'm saying is, yeah, they could do something like this. They could come up with a regulation, and then Wall Street, Ken Griffin or whoever, will find a way to exploit it and use it in a way that it was not intended to be, kind of like they did with this. But anyway, I mean, I don't even think it'll get that far, to be honest with you. They could issue proposals this fall. Okay. They could. Yeah, they could. They very well could. That's true. They could. They could issue a proposal. So they could issue a proposal. That's like 4 steps from anything actually even being discussed, let alone passed. But, I mean, whatever, But what happens... Just my question. What happens if they do restructure the market somehow and it's more fair for retail investors, but there's no short squeeze? What then?
It is the SEC. They have come out with that meme stock video. And I don't really have the fullest faith in the SEC right now in order to really enact some of these rules. But
of course not.
Again, I do want to maintain that cautious optimism that they are going to come through eventually. I don't think it's going to happen very quickly, but I do think eventually these types of regulations and rules are coming. So that is going to wrap up this update on AMC.
All right.
If you guys enjoyed...
that was terrible. So, I mean, yeah, like... Has the AMC mess taught people anything? I mean, I'm sure that there are a lot of misconceptions that have been further entrenched in people's minds, but I don't think that's what you mean. Or there's a lot of people who now think that retail investors... There is no way retail investors can make money in the stock market. There are absolutely people who have taken, that's what they've taken from this last year and a half, is that retail just gets screwed left and right. And Frankie Muhammad, I mean, this video that he put out today, oh my God. I mean, here's what people learn. Here you go, Antoinette. Here you go. I got it. Well, where is it? It's not even on here. Probably got, well, it probably didn't, but probably should get removed. Not strike. Not strike. Here it is. Wall Street has a hidden plan to financially kill off retail investors. Listen to this gem. This is what people learned.
Hey, this is Frank. Let me say I'm not a financial advisor. Anything that I say in this video should be used for entertainment purposes only. Whatever I say in this video is my opinion, and it may not necessarily be factual. I was checking out AB investment video, and he was saying that the individuals that was playing the roles in the commercials, man, that the SEC put out, he said that those individuals from Motley Fools. And you know what, man? My thing is this. If that's true, I ain't trying to
yeah, okay. Yeah, they're from the Motley Fool. All right.
Nothing, man, that anybody got anything to do with Motley Fool's talking about. We all know how Motley Fools feel about retail investors. We all know about the different type of articles they put out, man, that's been anti-AMC, anti-retail investors. So anything, man, that they involved in, I'm not trying to pay attention to none of that. Look, man, in my opinion, I feel like Wall Street has a hidden plan to financially, man, kill off retail investors. They don't want us in the stock market no more. See, it's a lot of money involved in this short squeeze play. And it's the kind of money that people normally go to war over. See, the attacks that's coming through the media, in my opinion, man, it's part of a war strategy that's been put together by hedge funds, you know, by the institutions, you know, by the one percenters.
The one percenters. This guy hates the one percenters. He hates them. They are his mortal enemy, the one percenters.
Again, all this media and stuff, all this stuff they're putting out there is a part of a war strategy. See, I was always taught that when somebody make a decision, when a country or whoever it is, when somebody make a decision to go to war with somebody, the first casualty of war is the truth. You see what I'm saying? The first thing that the op of the
now, here's what I was thinking about when I heard this part earlier. Think about this in relation to the apes. So when he's talking about the enemy and all that stuff and what they do and all that, I was thinking about the apes are doing the same damn thing. See if you catch it.
It's the truth. You see what I'm saying? The first thing that the op of the enemy want to do, man, is they start lying. They start distorting the truth, and they start spreading propaganda. And if you look at it, that's what they doing to us, making us look bad, you know, talking about we don't do research, talking about us investing in meme stocks. People don't need to have anything to do with us as retail investors. See, man, it has started. The first thing you want to do is start spreading lies, propaganda, and distorting the truth. And see,
that's exactly what these influencers have done. That is exactly what this narrative is.
See, that's what that's what the institutions and the one percenters are doing right now. See, the enemy always want to paint the picture that their opponent, you know, is evil. And
that's what the retail investors are doing to the hedge funds and the market makers and Wall Street. You literally call them the devil, okay? You literally call them the devil.
Their opponent is a villain, a bad person.
Like Ken Griffin? Like Ken Griffin, right?
You see what I'm saying? And the reason why they do that because when they want to move in on that particular person and they want to do something bad to that person, you know, something harmful to that particular person or group of people, they want to make the person or group look bad because when they move in and they do something bad to them, they don't want it to be an outcry.
Like when retail investors collude to create a short squeeze. I mean, how can you? I'm not even gonna ask because there's no answer. But I don't know how people could be so deep in their bias that they don't understand that they're literally describing themselves. It's crazy. It's crazy.
See, they don't want it to be an outcry because they've already painted the picture that they bad. See, they want us to look bad. They want us to be the villain. So when they move in and they do something, man, that's wrong and it's not right to us, they don't want the people to have an outcry because they've already made us look bad. See, it's a part of their war strategy. This is part of their war strategy. See, man, a lot of us in this squeeze play, we've seen a lot, man. A lot of us, man, we've been through a lot. You see what I'm saying? The money that we put into this in this squeeze play, man, we had to get it out the mud. A lot of people, man, have lost family members. A lot of people have, lost friends, while they have been using our money over a past year and a half, playing with our money, and getting rich. Man, we've been through a lot. You see what I'm saying? So, man, now they all want
nobody forced you to spend your money. Nobody spent your money for you. You're responsible for what you buy. That was kind of my response to this. It's like, yeah, you buy a stock, and stocks go up and down, and sometimes you win, and sometimes you lose. But regardless of whether you win or lose, it's your doing. It's your fault. It's your fault if you profit, or it's your fault if you don't profit. Idled attitude. It's crazy.
To come together. Everybody on their side. They want to come together, man. They want to group up, and they want to use their power. They want to use their money, and they want to use their influence to try to destroy retail investors. They want to gang up on retail investors. You see what I'm saying? Because see what it is, Wall Street,
retail
man, is
investors want to gang up on the hedge funds.
Retail investors have learned how to use the stock market to build wealth. And see, that was only designed for institutions, hedge funds, and billionaires. So retail, was only let in the stock market so that we could be a cash cow for billionaires. That's the only reason why they wanted us in the stock market. So now the hedge funds, the market makers, and the 1%ers, man, they can't make money like they used to. You see what I'm saying? So they upset. The way retail investors are moving in the stock market.
Oh, really? Where does this come from? They can't make money like they used to. Has he been listening to Charles Payne or something? The Reddit revolutions changed Wall Street. It's just, I don't. I guess I am. I'm just on the wrong end of this scam, and I am pissed.
The short sellers and the market makers and the 1%ers, man, they losing money. And see, that wasn't supposed to happen.
The short sellers are losing money. Yeah. The short sellers are losing so much money. Oh, my God. How? What?
So now they don't want us in the stock market anymore. They don't want retail investors in the stock market. So they would rather crash the stock market, cause all kind of havoc in the stock market, cause people to lose money, than to see retail investors make money. Because
where is he getting his fucking narrative from? He's reading something. He's reading his notes probably, but they would rather crash the market? My God.
See, they the only ones that's supposed to be able to use the stock market to get rich. And that's just the way it is. So they at war with retail investors. Everything that you're seeing that's going on in the news media, man,
garbage.
Is all a part of a strategy. They just trying to push us out the stock market. You see what I'm saying? That's what all these smear campaigns is, talking about, man, we shouldn't be investing in meme stocks. We don't do research. You see what I'm saying? All of it, man, is a plan to destroy retail investors. It's a hit. That's all it is. But here's the thing, man. We don't have no fear. You see what I'm saying, man? We're not going anywhere. They know what they did. They got to pay up, and they need to clean the market up. And they need to clean the market up to the point to where companies can grow. Hedge funds and short sellers, man, need to stop running companies out of business, trying to bankrupt them, run them all the way.
When's the last time that a hedge fund bankrupted a company? I don't even know. I'm sure it happens all the time, right? That's the only reason that anybody would want to short sell, is to drive a company out of business. A perfectly good company that's not engaged in any fraud or anything like that. Come on, dude.
Way down to zero so they can profit and take the money and don't pay no taxes. Man, they need to clean the stock market up. They need to get rid of the dog pool, the abuse of the dog pool, payment for order flow. All that kind of stuff, man. They need to clean that stuff up. See what I'm saying? Man, we ain't going nowhere. All they trying to do, man, is financially destroy, kill off retail investors so we can't use the stock market to get wealthy. But, man, we ain't going anywhere. Damn it, hands, man. Thank you for taking time out to watch the video.
Okay, so, I mean, Model 3 dude's hitting it right on the nail, right on the head. Nail right on the head. And the thing is, like, he's saying that they want to kill off retail, they want retail investors out of the market, but we're not going anywhere. So the irony there is, I mean, you're not going anywhere, okay? You're not going anywhere. I'll literally hold until zero. Well, what happens in that case? Who wins in that case? I mean, I just don't understand how, you know, this is fractal wrongness at its best. At its best. At its most pure. It really is. And I got this from Thunderfoot. You're not just wrong. You are recursively wrong. The wrongness of every possible iteration of any of your arguments is self-similar with the wrongness of your entire worldview. And that's pretty much what this is. It is fractally wrong. Fractal wrongness. It's just completely misguided. And I know that people have misguided beliefs about all kinds of stuff. But what we have here is a situation where these people with misguided beliefs are influencing other people in kind of, you know, a dangerous way. Not dangerous, like physically dangerous, but necessarily, but does he think that he thinks he's gonna get rich? And I don't even want to look at the comments on that video, but it's just, I mean, it's just fucked up. Just fucked up. Now, what did somebody say here? We have hedge fund winner chicken dinner. Apes, we will hold to zero. Hedge funds? Hedge huns. Wish granted. New market regulation will ensure all stocks go up. Hey, that's what they want. That's what they want. The world did get a little dumber. I lost some brain cells for sure. Let's see what good old Uncle Lou's talking about. Jesus. I can't imagine.
What's going on, my silly little motherfuckers? All right, listen.
Well, he's right about silly. He's right about the silly part, isn't he? Fuck.
Through a couple of vids really fast. One thing I want to put out is, okay, we become aware of that side infiltrating our space calls. So I want to break that into two pieces right now. One, if my information, my little group's information is bullshit, then why is major motherfuckers or major firms, their staff people...
Oh, this is a fantastic straw man argument. This is fucking classic.
Motherfuckers or major firms, their staff people, logging in under different names onto our calls. I'm not going to out the motherfuckers yet. But if the information was bullshit, if it wasn't real, why the fuck would we have motherfuckers from those firms here? Now, let me break it into the other side of the fence. It's always sirens. For the people from the other side, I don't really know what you expect to get on this infiltration bullshit. Yeah,
I mean, this is just like complete make believe, I'm sure. But that straw man argument, if what I was saying was so wrong. And if I'm really full of shit, then why would they be here? It must mean that I'm not wrong. That is a terrible argument. That's a juvenile argument, actually. That's something a fucking teenager would say. God.
It's an ambulance. Give it a second.
Jesus. Yeah, he's in New York City. I
feel sorry for the motherfucker that falls asleep listening to my videos in his earbuds, and that comes up. Okay, for the people from the street that are logging on under other people's names,
I love when he talks to people from Wall Street.
I'm not no leader of nobody. I don't control nobody's buy-in or sell price or nothing like that. Everybody here is individual.
Yeah, you got to go to Trey for that.
The only thing you're going to hear on our side is things like, 1, you ran out of free money. 2, nobody wants to lend money. 3, there's an uncomfortableness because nobody knows what's coming next with this fucking wild chicken apocalypse economy. And we talk about the shit that's going on with the brokers not being able to fulfill certain orders because shares are not there. We talk about little ramifications that could happen if this gets obviously a little bit crazy in the economy. But other than that, for real, why would you guys want to be logged on to this? I'm going to say something, and I hope motherfuckers understand, and I hope everybody listens to this.
Shit, I was muted. They're laughing their ass off and playing it for the whole office. That's why, Lou.
Those motherfuckers and the ones above. I only came into this to help people understand how these orders were being rerouted, how these stocks, these synthetics were being layered, and how everybody works together and how that price wasn't real. But I did that so people wouldn't get fucked over and get cheated out of an opportunity.
Well, that's ironic because guess what? You've created bag holders too, my friend. You've created many bag holders. And it started out kind of as a different class of bag holder. It was interesting how Lou appealed to people that didn't like Trey and Matt. And he set up this, this faction, like, oh, these guys are selling, T-shirts, and they're taking super chats, and they're making money off you. And then, mysteriously, somebody monetized his channel. I mean, he didn't do it. Well, you have to opt into that. So, I mean, it doesn't just happen by default. It was like, I don't know. I want to say an older audience at first. I'm talking about at first, last year. That didn't like Trey and Matt kohrs. And the super, she used to talk about the super chatters, and I would see in the comments, like, people talking about, just ridiculous things like, taking out a second mortgage on their house, or, using their kids' college fund. And I actually had a few in an email exchange. I gave this kid, he was in one of Lou's comments, and he was like talking about how he, couldn't pay his rent and yada, yada, yada. And I actually gave him my email address and told him to email me. And, if you want to, you need somebody to talk to or whatever, because I sensed that he was like very desperate. And we exchanged a few emails, and, I tried to, get him to manage his expectations. And then I stopped hearing from the guy, so I don't know what happened. And I tried emailing him a couple times, and, this was when AMC was like in the 50s last year, or 40s. So I don't know, but like, you're trying to help people, If that's what you're trying to do, you have failed at that.
That being said, I was one of those people, but I worked with you motherfuckers, and I know exactly what was going on. So now here we are today.
I was trying not
I see a lot
to,
of things
actually.
that shouldn't
Try
be
not to say
happening.
boomers.
And let's face it, this play should have been done a long time ago. We know now that people have been doing, obviously, a lot of fucked up stuff. You know, making that phone call, telling somebody you want to borrow shares with money you don't got, and they turn around and tell you, no problem, I can lend you those shares, and they don't got those shares. And at the end of the day, you guys cancel out. But you're doing that against the kids. So if it's between them and you motherfuckers, you know where I stand. So I think that trying to infiltrate the space calls in order to listen in and hire the bots is stupid. You think the technology that we have there is not outing you? We're vetting people. We're vetting people because there's also a lot of crazy motherfuckers out in this world, okay? So don't do it. Because I'm going to side with these fucking kids, because at the end of the day, and I call them kids because they don't...
These fucking kids. Wow, this is weird, like weird language. Weird ass language from Lou here.
I have experience in this world. Unfortunately, I've been tainted in this motherfucker. I was born in the darkness. Just cut it out already, okay? So, but if you motherfuckers are in it trying to find out what's going on in order for you to make your side bet outside of your fucking employer, welcome aboard, motherfucker. Welcome to the dark side. But other than that, like I said, I'm not known.
You're on Darth Vader's channel right here.
Of nobody that I'm associated with is telling people what price to come in and sell or anything or buy. We don't do any of that. We don't promote no stock, no crypto. We don't tell nobody to do anything. We don't make any money from nothing. Just what we do. So just wanted to put that out there. So that ends this video.
Okay. I love when he talks to Wall Street people in his video. I love that. Like, because, you know, like you know, just with the way that people interpret anything, they take it seriously. They take it for face value. And it's like, all right, well, I was online back in the late 90s. And before, really, but I mean, on the internet in the 90s, there used to be a thing, I said this once before, many times before actually, that there used to be a thing. It was called, you don't believe stuff you read on the internet, especially when it comes to like money and investing and where you should spend your money. And this was like when like the Nigerian prince scam, email scams were like, you know, hot shit. It's interesting to me how that's gone out the window. And I think that things are more personal now. You know, you have these personalities and you want to trust these, they want to trust these people and they believe that they're on their side and all this kind of stuff. But I think it also speaks to some kind of desperation. And I said this last year too, like, it kind of, in a way, displays like how fucked up things are to me, that people are willing to trust a guy like Lou or a kid like Trey or Matt Kohrs with something like this. It's interesting, and I don't really have any thesis beyond that. Just that it's just, yeah, vetting people from your phone. Yep. Ooh, Lou is getting harassed, something fierce. If what he has been saying was BS, they would be silent. I mean, that's, honey, you've never taken any type of, I don't know, freshman English. Like that would not stand in a freshman English essay. That type of logic. It's not valid. They know what he says is true, and they know they are screwed. Thanks, Lou, for your courage under incredible pressure, for standing up for the little guy and being a true hero of the underdogs in this play. Oh, my. If the common man that just puts his money into retirement investments and parks it for 20, 30 years only knew what goes on, Bubby Stamper, they would have pulled it 3 weeks after they started. We will win because of DD and research. We ain't dumb money. Yeah, they are definitely a perverted type of influencer. They, yes, they. Driving around listening to Lou high as fuck. Pulled to the side of the road when I heard the sirens. I believe that. I believe that. For some reason, I believe this. Is he saying Lou's high as fuck too, though? Double entendre. Been the realest dude out, not just getting pretend pissed while selling, scalping, and leading us all on. Lou is the realist. Much love. Okay. Again, why do you think that? Lou doesn't tell us jack squat on what to do. We are all adults about the market and our money. We all stand by our own convictions. We choose whom to listen about their life's lessons and what they have lived. Run along, intern, who can't afford their mortgage, being low in pecker order. I'm not even going to say, I'm just going to highlight that and, holding to the thousands they messed up and it's time they pay us. I'll hold till I get paid. After that, I'm out of the stocks for a very good while. That's a common sentiment, too. A lot of people saying that. After this squeezes, I'm out of the market. But see, unlike what Frankie says, I don't think the market wants to get rid of these people. Or anybody, really, for that matter. They make too much money off of them. So for that reason alone, and this is another don't show your hand point. Because if they Model 3 dude, if they actually cared about this kind of, if they actually looked at this and cared, which I don't think they do, but if they did, and they saw all these people say, our algorithm scraped all the comments, and you know what? In the top 10, one of the top 10 things, this is the hedge fund meeting or whatever, one of the top 10 things that we should address is the fact that they say, they, meaning the apes say that after the squeeze happens, and then they'll all have a little chuckle, like, yeah, right, the squeeze. After the squeeze happens, they say they're leaving the market. So we know the squeeze, we're not going to make the squeeze happen. But, we'll maybe lead them on a little bit and keep them in. And then, I just think that that's foolish. First, no one appointed you the leader. I imagine most AMC cheerleader YouTubers are afraid to admit that 100K is a fantasy as to avoid losing subs and views, thus monetization. I have 400 shares, but not expecting anything over 1,000. More is welcome, though, as it will put AMC over $1 trillion market cap, twice the Volkswagen squeeze. 100K is pure fantasy, and if you wait till then, you'll just be holding at fundamental value afterwards. That being said, be prepared for a small short cover, and then a hold, so it drives the price up to 100 or so, then temporarily drops, causing a massive sell-off before the rest of the covering happens down the line. Days, months. So, this is somebody who imagines that they are more reasonable in their expectations. Not expecting anything over 1,000. Don't be greedy. 1,000. And people are not going to, they have not held A lot of people have not held. Some people have. Some people bought more. But there's enough people selling. There's enough selling happening on these short covering rallies that I don't, just try to get over 20. Let's, let's set it at 20 first. And then if you can hang with 20, well, it's still going to probably dip back down. But Al has a good video out with a hedge fund guy. A hedge fund guy. I cannot imagine. I mean, I saw that video. I mean, I saw it that it was out. I'm not Phil from Philly. I don't know. They will be in the market for years because this crap won't squeeze. They need dumb money. Hey, you with the coke. Yeah, you snorting off your keyboard. Yeah, you telling your clients GameStop is a CD-ROM company and that AMC is going to go bankrupt. You. Yeah, you. Your clients don't believe you anymore. And retail certainly will never believe you. So might as well jump and be first. Never look back. Live another day. Ken Griffin won't protect you. Why would you snort coke off your keyboard? How would that would clearly they've never snorted coke off of their desk before, because off your keyboard? Holding into the thousands, they can fuck off. Billions to cover. See, billions to cover. It requires synthetic shares in order to be anything. Because even if the short interest were this whole 180 million, 181 million, it's still, I mean, again, this day over here is 226. I mean, it's not all buying, but you got to have the synthetic shares. It has to be there, because if not, I mean, it would be fabulous if, and this this probably would not happen, but all shorts cover tomorrow, and it goes to 36. Saying. So ready for this to be over, brew. Yep, the apes are starting to crack, some of them. It's over. You got scammed. See, there's some people that get it out here, but you got to look for them, and they're buried in comments and replies. The market is not real. I'm gone after this. Oh, okay. See all these people, they're out of the market. Yeah, true. Al had hedge fund manager live today, and he says how the SEC allows it all, and they are the real enemy by not changing the rules. See, this is the danger of this shit. So who the fuck knows who Al from Islamabad fucking talked to? Who the hell knows who it is? And now, I mean, Al is so full of shit. So full of shit that he is literally the top tier grifter from our tier list that we did a couple weeks ago. He's literally right at the top. Right next to Lou and Trey. And the Kansas 5. But I mean, let me bring some random person on my channel and have a conversation with them and say that they're from a hedge fund and spout all kinds of shit that may or may not be true. I mean, it's just like, this is out of control. This is fucking out of control. Absolutely out of control. And nobody in this community, none of these people, this winter fern, they're not looking for evidence. They're not looking for evidence. They're not demanding evidence. They're not demanding empirical proof. Because if they did, a lot of these fucking scammers would be shut down. They would have been shut down last year. Because Trey never had any proof. He never had any verifiable proof that after June 2nd, that it was going to run back up and go even higher. He never had any proof of that, and it never happened. But everybody trusted him. People trusted him. Enough people trusted him. It's absolutely wild. Apes snort coke from their Blockbuster membership cards. Oh, God. Oh, my God. Tom Fudzullo.
All right, everybody, we got quite the video today. I wanted to do something a little bit different and talk about my price target, my updated price target for AMC. And this also somewhat applies to GameStop, but I'm specifically talking about AMC in this video. There's been an increasing conversation around price targets for AMC, especially today.
Poor man's
and I wanted to give my updated perspective because I have said in the past that I believe that $100,000 is a realistic possibility for AMC per share. This has caught a lot of people off guard. This has gotten me flack online. This has gotten a lot of people saying I'm insane. I've even done an interview with a hedge fund guy who we talked about this price target, how possible it is. That's actually the most popular video on my channel.
Well, that's weird.
And so my perspective.
So when a hedge fund manager comes on to an ape influencer's channel and says, I'm just, speculating here, that the hedge fund manager says that $100,000, oh yeah, it's possible. It's totally possible. That hedge fund manager will believe. Yep. We'll believe him. Yep. But in general, hedge fund managers are the devil. They're the devil. What the fuck?
It has always been $100,000 is possible. And today, I still have that opinion. My updated perspective is still that $100,000 is a possible price target. So in this video, I'm going to be breaking that down. This video is not financial advice. Follow your own research, but I'm going to be giving you my opinion. Okay, so first up,
I love that. Follow your own research, but I'm going to give you my opinion. Great. Okay. It's not going to influence anybody, I'm sure,
Will happen. Two completely separate things. When the time comes where we experience a short squeeze, it's going to be up to us to hold on, or at least a certain group of us to hold on and not get too greedy and not take our money off the table too early. We got to stay strong, we got to stay confident, and we have to realize that this is going to be a once in a generation, maybe even once in a millennia, financial redistribution of wealth. This is not going to be a typical day of trading when this happens. I would liken this.
Capitalism is going to break down. It's literally going to break down, and the poors are going to get all the rich money. I mean, come on. It's a fucking Hans Christian Andersen tale.
The experience.
It's a Hans West Christian Andersen tale.
Almost similar on the scale of the French Revolution or something like that. A completely once-in-a-lifetime monumental shift in the financial ecosystem. This will make 2008 look like you spilled a glass of milk. So when this time comes, we are going to have a lot of pressure on us as AMC and GameStop holders. So this video is going to be about how this can happen. I'm not going to be talking about how this will happen because that is in part out of my control. I'm trying to influence this by making videos about this type of thing.
Way to walk the line there, Tom. I'm going to talk about how it can happen, but I'm not going to say it will.
And I'm trying to make it more possible by talking about this stuff. But at the same time, we're going to be talking about how this can happen. Okay, so let's get into it. Now, a few baselines. Obviously, most of us know about naked short selling, but a quick review, naked short selling is when you take a stock and you say,
here we go. Oh, here we go. We're starting with a great assumption. Like I always say, the best thing to do is start with an assumption and build your opinion, build your stance off of that. because that's a solid foundation. Oh my God.
I'm just going to sell this stock and short the stock, make money by when it goes down, but I'm going to sell it without owning it. So I'm just selling the stock, typically a covered short position. You borrow the stock and then you sell it, and that way you're covered, so that it's a legitimate transaction. But if you just sell the stock, you can sell as many shares as you want because you're not borrowing that stock.
No,
so
you can't, Tom. No, you fucking can't. I mean, seriously, you can just sell it. You can just sell as many shares as you want. Yeah, you can do it right now on your Robinhood account. I mean, what the fuck? What the fuck? It's like, oh yeah, this is illegal. And nobody has demonstrated that this is occurring at all in these fucking stocks. But here's Tom Fudzullo just assuming, making an assumption. I mean, come on, dude. Fuck?
For instance, 10 times the float of the company just by selling over and over and over again. And if you have the ability to do this, if you're an institution that has the ability to do this, why wouldn't you? Because it's basically free money, because you can short the stock so much that eventually the stock just goes bankrupt. That's kind of the whole theory behind what's going on with AMC and GameStop. These hedge funds saw these
Yeah, that's a fucking dumb theory. That's the stupidest theory I've ever heard. And if that's the theory, then you're fucked. If you actually believe this, Fudzullo. I mean, come on. How does he... Oh my God, how old is this guy? He's like 22 or something? He looks like he's 17.
Retail companies, and they just said, we're going to sell the stocks. We're not going to borrow against that short sale. We're just going to sell it, and when the time comes to cover, we won't need to cover because the company will be bankrupt after COVID, after all of this.
So not only... Oh my God. Oh my fucking God. What the
Retail
fuck?
fatigue, everything will be over, and then we won't even need to cover the short position, or maybe we will for, a fraction of a penny per share, and then we'll just have made all of this money up here at the higher portion of the market. So that's what happened. However, obviously,
he said that's what happened. He just said that's what happened. Oh my God. This is fucking bad. This is the worst video that I've seen today.
History did not go in that direction. These retailers, in many cases, became stronger. So when these guys sold here, they were expecting it to crash to the bottom. Instead, the retailers just kept going, and in part due to the retail investors, people kept going stronger and stronger. We recently saw even Melvin Capital, one of the top guys who did this here, is now closing their practice just this month. So we also see tons of struggling hedge funds right now. Over 2,300.
Yeah, right. Maybe they shouldn't have naked shorted the stock.
Exact number 2,350. We see tons of U.S. hedge funds facing big struggles. We see Melvin Capital. We've been doing research onto their.
Okay, that I'm pretty sure that was for Chinese hedge funds. I'll look it up.
Offshore accounts here on the channel.
Other
I don't
screen
think
over
that
here.
Things are going well for Citadel. Excuse me, I think I said Melvin. I meant to say Citadel. So now let's get into the $100,000 point, because these people, they need to cover their shares. They were expecting to cover their shares down here for pennies on the dollar, say 1 cent, but they didn't. They couldn't do that, so they need to cover these shares. They don't want to cover them here, obviously, because that's going to be a tremendous loss for them. So they're just still hoping that things will come down. However, most of the people who are betting against these short-selling hedge funds, against this market corruption, believe that instead of this going down, we will see a squeeze. These squeezes have happened before. It's happened with Volkswagen, several other companies. It did happen.
There we go with the fucking Volkswagen rhetoric again. Yeah, it happened because it was exactly the same. It was exactly the same situation. Yeah, right. Of
smaller
course.
Scale with AMC and GameStop already. However, no sell, no sell.
Ooh.
What that means is most people are committed to not sell until these guys are in jail for what they did. This is illegal. They shouldn't be doing this. Okay, so now let's talk about...
You haven't shown any fucking proof for it, Tom. You haven't shown any proof. I mean, this is ridiculous. Oh my God.
Assuming
you're not going to show any proof. So yeah, so let's send them to jail. Well, what is this? A third world country? Oh yeah, these guys are naked short selling. Take them to jail. Take them to jail. No, you have to prove something, Tom. You have to prove something. We can prove that you're an idiot quite easily.
How is it possible that we hit $100,000 per share? Because that's probably around $50 trillion of a market cap for AMC. People are going to say AMC could never hit a $50 trillion market cap. Remember, I believe that this is going to be a once-in-a-lifetime financial redistribution. So I'm not overly concerned about the the ability for this moment in time to fit in with the rest of the day-to-day trading. This is going to be a very unique time period. But everybody understands that $50 trillion for a movie theater company is completely unreasonable. I mean, no matter how bullish you are on AMC or GameStop, we all realize $50 trillion is not happening. However, we don't need this to sustain a $50 trillion level. A lot of people try to say, oh, it'll never hit that. We know that it's not going to be worth $50 trillion fundamentally. However, that's not how the market necessarily works. We need to realize that
I'm going to trust you.
We are going to be in a seller's market. We just need a time frame, a short period of time where we're at least $100,000 in order for this movement to be a success. So how do we get there? Let's break down some numbers. So let's say there's 500 million shares of AMC out in the market, roughly. Okay, or there should be 500 million shares of AMC. These are the shares that the company has issued. Remember when we were talking about the short selling, how they just create a bunch of new shares here?
Yeah.
All these shares are still in the market. These shares are created out of thin air. Remember, if you just sell a share without owning it, you're creating a completely new share. This has been done potentially billions of times. There's no true estimate on the number of synthetic shares out in the market for AMC or GameStop.
Oh, yeah. No, there's an estimate. There is an estimate. What you meant to say is there's no proof. There's no substance. Oh, there's speculation. There's estimation. Yeah, there's that. That definitely exists. But there's no proof. There's no evidence. Oh my God.
However, just looking at the volume, many people, the day-to-day trading volume is so high, so abnormally high for AMC and GameStop. Many people assume that there are about 10 times the number of shares in the market than there should be in the market. So essentially, this company has been sold 10 different times. Let's be using a more conservative number. Let's say instead of 500 shares that were issued, let's say the number of shares actually being traded is 2.5 billion. Okay. So again, this is an estimation. Nobody knows the exact number truly of shares in the market.
So let me just pull a number out of my ass.
In this scenario, 2.5 billion.
Fantastic.
Now the interesting part is that Aron, the CEO of AMC, has stated that retail owns about 90% of the float.
You know what? You know what Aron has also stated? He stated that there is no evidence for naked short selling or so-called synthetic shares of AMC. He stated that last year when this whole fucking dumbass synthetic share narrative got kicked off, I think by Lou. And he said excluding, I mean, like this guy, he just doesn't care. Like 90% of the float, yeah, disregard that excluding index funds bit. Let's just disregard that, okay? God.
Applies to the 2.5 billion. This means that we're looking at least 2 billion shares conservatively. Let's just say 2 billion for the sake of math, that are owned by retail investors.
That is absolutely absurd.
Of the float owned by retail investors. Now, the float should be 500 million. This is what the company has issued. However, as of right now, the float potentially is much, much higher than that. Now, you may be saying, okay, well, I looked up on Fidelity that the share is 525 million right now, or something like that.
No, it's 516.
I don't, you know, my trading view account says the share is 500 million, something like that. So how do we know that it's really 2.5 billion?
Good question.
I would say you just got to do research on Reddit, on YouTube. That's the scope of this video.
Yeah, I went on my Fidelity account and it says there's 516 million shares. Well, what I would say is you just need to do research on Reddit. Fuck you, Tom Fudzulo. Fuck you. You are a fucking clown. Oh my God. Do research on Reddit. Fuck.
But we've done a ton of videos talking about this. Look at the volume. Look how insanely high the volume is for these stocks. It's unreasonable. Look the amount of shares being.
Oh, you know why the volume was through the roof? Because the influencers pumped it. Because retail had a shitload of money from stimulus checks and unemployment last year. It's not that fucking hard. Not that hard to figure out. It's not at all.
Traded if we really had a 500 million share basis, because if we really had 500 million shares, the volume would not be this insane for these companies.
Wrong.
On top of
wrong.
That, it's also worth mentioning that the majority, according to the SEC chairman, okay, this is not some snub on YouTube. According to the SEC chairman, 90 to 95% of retail orders are executed off of the lit exchange in dark pools. So they're not happening on the New York Stock Exchange. They're not happening where these numbers are easily reported. 90 to 95%.
Yeah, and if they were, you'd be paying more for the fucking stocks. You'd literally be paying more for the stocks. You'd be buying on the ask.
Is going off of the exchange into the dark pools where nobody knows what is happening in there. So the volume that we see that's so insane right now, that makes it hard to believe that there's 500 million shares, that's volume on the lit exchanges. Okay? So that's about 5 to 10% of the overall trading volume. Imagine if we could see the trading volume on dark pools. Dark pools are just private programs that allow hedge funds and other institutions to trade between each other.
That's also wrong. That's way wrong. Imagine if we could see the volume on the dark. Like, he doesn't think that volume of off exchange is reported in the trading volume. I mean, these trades are printed to the tape. They are printed to the consolidated tape.
5 to 10% of the overall trading volume. Imagine if we could see the trading volume on dark pools. Dark pools are just private programs that allow hedge funds and other institutions to trade between each other. Okay? So estimations range, but for this, we're going to be conservatively saying that retail holds 2 billion shares of AMC. Okay? So that's a conservative estimate. If you want to disagree, it is what it is. Dislike the video. I don't care. That's my estimation. 2 billion shares. So what happens when these guys have to start covering, when they have to start repurchasing those 2 billion shares? Well, there's going to be a lot of paper.
Well, you skipped some steps, Tom. Why would they have to do that? What would cause them to have to do that? Let's just skip that. Let's just skip over that. Oh, and if there's 2 billion shares in existence, why are there only like 30 million trading most days, between I don't know what, 39, 23. Oh yeah, there were a couple days it was over 100, 200 million, but why 25 million, 32, 41, 82? That's like a speck. Why is that happening now? Okay.
Per hands. There's going to be a lot of people who sell right away. Keep in mind, let's say that there's 2 billion shares that are all shorted. These are shares that have been shorted. Retail owns them, but potentially 2.5 billion shares have been shorted. I think it's probably more than that, but we're using that number as the baseline.
Of course.
And then of that 2.5, 90% owned by retail, we're using conservatively 2 billion in case it's dropped or it's a little less or whatever. Okay, let's get a new color. So when these guys close their short position, what color should we choose? Let's go with pink. All right. When these guys close their short position, which inevitably is going to happen at some point. Now, you may wonder, well, why don't they just infinitely hold this short position? Because they are paying interest on this short position, and at times...
Whoa, Tom. Whoa. Hold on a second. You said that they didn't borrow them at first. You said these were naked shorts. They're not paying interest if it's naked shorts. What the fuck? I mean, am I wrong? He was saying naked short. What they do is they just sell them. They don't borrow them. They just sell them. And now he's saying that, well, why can't they just hold them? Well, because, of course, they're paying interest on them. Not if they didn't borrow them. So, which one is it, Tom? Which one is it?
Definitely hold this short position because they are paying interest on this short position, and at times this interest rate is very, very costly. At times they're paying, several $1 million a day just to maintain this short position, and this interest rate, obviously just keeps going up. And the more interest there is in AMC and GameStop, the more money they're going to pay. They cannot hold this indefinitely. On top of that, as this market is starting to come down, as we may be facing recession, this could expedite this process. Like we said, we already have Melvin Capital, and they're dealing with expedite this process. As this market we're seeing is starting to come down, as we may be facing recession, this could expedite this process. Like we said, we already have Melvin Capital.
Because AMC is going to come down with it, and it'll make the short positions more. Wait a minute, what? God,
Capital.
He doesn't understand shit about the market. Holy fuck.
On top of that, we have a new executive order, which is taking certain Chinese companies off of the list that these companies can use to borrow money against, which could cause a domino effect. That's beyond the scope of this video as well. Bottom line is, these guys are eventually going to have to close their short position. Say it's 2.5 billion shares. Okay? They got to buy 2.5 billion shares from a market that only should have 500 million shares. That's a lot of buying. They basically have to buy the entire float of AMC 5 times, maybe more than that. Let's say they have to do that 5 times. Of that, keep in mind, the retail investors own about 2 billion of these shares. And that's a lot of damage. That's a lot of shares that they're going to have to purchase from these retail investors. So I like to think of this as a hypothetical scenario where there's a plane with 100 passengers, maximum occupancy of 100. This is the only plane that will ever exist. This is the last plane ever. There's not going to be any other flights. But you went and sold 500 tickets, okay, because you wanted to make a quick buck. Now, you're required by law to honor these tickets no matter what. If you don't honor them, the government will insure them. Okay, this would symbolize the FDIC insurance that we have in our brokerage. So you sold 500 of these tickets.
What? What did he just say? Like, there are so many factual errors in this. It is unbelievable. This is unfucking believable. And Lynn, you want to talk about a YouTuber that should definitely be getting a phone call from the SEC? Holy shit. 5,000 views. It'll probably be double that tomorrow. Oh my God. This is fucking terrible. I'm really at a loss for words. This is so bad.
What are you going to do about it? Because you can try to buy them back from 100 of the people who have seats. So let's say you go to the people with the seats, you try to buy back 100 of them. But that's only going to go so far. You would have to do that 5 different times, or you'd have to figure out a way to make everybody happy with their seats. So you've entered into a new scenario where really there is a need to repurchase the entire plane 5 times over. Okay, so if let's say 79% of the people in the plane are willing to sell their tickets back to you at a reasonable price, okay, well then you're in luck, because 79% of that's pretty good, 79%. But wait a second. You still have an entire plane ride left, plus one person, who's not, let's use a better number. Let's say 70%. 70% are willing to sell your tickets back to you at a reasonable price. Okay, so now you have 100 tickets that you can, or you have 100 seats left that you can fit the last 30% of customers into.
This is the worst analogy I've ever heard.
So this last 30%, you can put them in, well, wait a second. You can't. You can only put 20% of them in the plane. So you can only make 20% of these happy. Okay, you got 70%, then now you have 20%.
God,
what happens in the last 10% here? What are you going to do about them? There's 10% left. You don't have any seats left to give them. These passengers are not willing to sell you their seats. Again, only 70% was willing to sell you your seats, okay? So the happy, pleasant customers who are willing to help you out, they're gone. They already sold you 70% of the seats back. Then you use the other tough customers. You have 30% tough customers. You put 20% of those tough customers in the seat, okay? So you gave in to 20% of the tough customers. But what are you going to do with that last 10%? You don't have any seats left to give them. They're not going to sell you like the 70% did. And the 20% isn't going to sell you either, because they're the tough customers. You put them in the seats. What are you going to do with 10%? You have to give them what they want. If they demand $1 million from you, you have no other choice. You got to give them $1 million.
Oh, okay. Yeah,
give them
right.
And that is the example that I would use to visualize and to kind of make sense of this whole short squeeze scenario. We've never seen something like this where there is such a overexposure in the market here. Now, like I said, this is something that can happen.
Well, there's this little detail that you haven't demonstrated, that there are naked shorts, and also the fact that you're saying that naked shorts have to pay a borrowing fee. I can't wait to see the comments on this.
Doesn't mean it will. If everybody is a pleasant, happy customer, if 100% of the customers are happy to give their seats back with no fuss, they're willing to give their seats back for, let's say, $30 or $40, $50, whatever it is, even $100, willing to give back their seats with no fuss, then the plane ride gets to depart and everything is great for Citadel. However, if we have at least 30% of customers who are fussing and they're refusing to give in to these demands, these people, the position still has to be covered. Nobody's selling their shares out of this group, out of this 30%. None of them are selling their shares. So they're going to get what they want. If they want a seat, they're getting a seat. If they want money, they're getting money. And this is the exact scenario here. Now, it's not perfect because there's not seats to give these people in my example, so it's a little bit of a weird, imperfect parable, if you will.
Right.
However, the basis is what really is what needs to be paid attention to here. These people need to get their money. They need to be made happy. It's required by law. And otherwise, if they don't do that, there is that possibility that Citadel just completely defaults. At the very least, you're FDIC insured for up to $250,000, or at least $250,000, $500,000 in some scenarios. So at the very least, you can expect some FDIC insurance money out of this situation. That's my whole theory. Feel free to share and like if you want to. Hope you enjoyed. Thanks for watching. I'll see you in the next one.
Holy fucking shit. That was the worst take ever. So many fucking factual errors, not the least of which is there is no FDIC insurance in a brokerage account. And it covers deposits in a bank account. I'm so proud you're back. Your DD is not only stellar, but comprehensible. Well, I don't doubt that it's comprehensible, but... Wow, excellent video. Wish Trey would stop focusing on what he thinks will not happen or is impossible. That kind of narrative and tone does not build up the community. This doesn't end until the ancient shorts cover. Yeah, like the ones that shorted at $5. Right, because they're definitely still holding those shorts. Yeah. They can take the buy button, but they can't take our shares. It's already happening. Right now, they're scrambling. Everyone man their positions. What world are you living in if you believe that? They're scrambling? Some of you need to understand that white hats are bringing in a new financial system. This will be huge. Level playing field inbound. White hats. Okay, Q. I'll upvote that. I will upvote that. Okay, Q. $2.5 billion is very conservative. My estimate is $6 billion. Yeah, estimate. This comment is actually the most true here. I totally agree with what you're saying. The fact is, BTC is the future of crypto, and the questions traders ask themselves now, if this is the right time to invest, before jumping into conclusion, literally these spam crypto comments are more comprehensible, are less nonsensical than what the apes are saying in these comments. The longer it takes, the more I buy. Well, that's why Wall Street they love them some dumb money. Yes, they do. They love when you say shit like this. They fucking love it. You are a fucking sheep. That way, when it squeezes, I'll have a huge multiplier. Smart. That's so smart. You're going to be rich. Sincere question from a 1-year ape. Uh-oh, you're going to get flamed to fucking shit. What is to stop brokers from taking away the buy button when AMC squeezes? Or simply halting it? Or literally doing whatever they feel like doing in order to stop buying pressure? Good question. It will definitely be halted because of the price swings. So there's nothing to really stop that. Brokers probably won't take away the buy button again, as that was a one and done type of thing. Okay. They got a slap on the wrist the first time, but would potentially be worse if they tried it again after the backlash it got. No. Absolutely not. I mean, the brokers are businesses. They are for-profit businesses. They don't exist for any other reason than to make money. How do they make money? By executing trades. They're sending trades to somebody that's going to execute them for them and pay them. And if they're not going to make money, they're not going to do it. So, I mean, good business sense right there, let me tell you. And that's a common theme with these apes. They have no business sense. They have very, very, very poor business sense. How do you stop buying pressure if most of us are holding and hedge funds need to still buy the shares? I'm praying. We all need this. You ain't even lying. Yeah. It's like literally, I'm in Ohio. I saw for the first time ever today. First time ever. And I know Lynn's going to be like, oh, I've been dealing with that for years. Gas in the $5 handle. $5 gas. Never seen it before in Ohio in 39 years of being alive. Today, I saw it for the first time. 507. And it was like 470 something last week. That's the real squeeze here. That's the squeeze. That is the real squeeze. The apes, I mean, is there anybody that's going to push back here? That's all I'm looking for. I'm looking for the first comment where somebody pushes back. If we could only galvanize a large majority of AMC GME Army to hold to 6-figure, that would be ideal, but I have to admit it will be hard when it goes into 4 figures even. My friend, it will be hard if it goes back to fucking 30. It will be hard if it goes back to 30. I mean, what is this? 4 figures? No fucking way. That's why, excuse me, that's why we're individual retail investors. And that's why what your neighbor's doing, what anybody else is doing, is irrelevant to what you're doing. That's the way it's supposed to be, because you can't count. You have to assume that the next person is going to buy high and sell low. So they're irrelevant. They don't matter. You can't make your decisions based on what other people are doing. That's that's one of the basics of trading and investing. I mean, seriously, that is how you lose money. That is okay. Hold 80% for life. Sell 20% for any price you want. If only we can trust each other 100%. And that right there, I mean, right, of course. I know AMC can easily hit 1K to 5K. I know it easily. I know in my heart, because I believe it. And I've been told it. $6.49. Holy shit. Must be in a blue state. I'm just kidding. Hey, Tom, what is going to make them have to close out their position? I don't believe they can afford to man. They're fucked. Otherwise, they would have already, correct? They thought retail would not hold, not buy the dip, get scared, and sell, in my opinion. I mean, this is pretty much all the greatest hits of the narrative. They're fucked. Okay. Otherwise, they would have already, correct? No. They're greedy. Maybe. You could say that. But fucked? At least you're smart enough to know the difference between can and will, unlike these other YouTubers. They only know will happen. Yeah, exactly. Investing is not a team sport. That's a fucking great way to put it. It's not. What happens to the companies that do squeeze and people sell? Are they protected, or do they suffer from the massive sell-off of their shares? I'm just trying to see if AA is actually on our side, or if our goal affects him negatively, and whatever he says is just to cover his own ass. Well, AA can just sell a few shares during MOAS. Also, we can just all buy back in at the lower price, so short hedge funds doesn't short them again. What? Why would you buy back at a lower price? It could be a never-ending cycle, the whole supply-demand thing. We squeeze and sell. It goes down, we all buy back lower. It goes back up because we're buying and repeat. What? So they're going to pump and dump themselves? What? Oh my God. And here we go. No, he can't. That's why he sold before MOAS. He isn't legally allowed to sell during periods of extreme price action changes, meaning MOAS. Oh, really? Really? Where's your source for that? I'm just looking for one. Oh, it might be right here. You just don't learn, do you? Whatever the price range you think the stock can soar to, even if it works theoretically, still relies on the market operating by the rule of supply and demand. We all know by now these criminals don't play by the rules and have a limited amount of ammos through synthetic well, I guess not. And the referees are siding with them, so they are either not getting caught or are getting away with minimum penalty compared to their profit. What makes you think we have any shot at MOAS? I've been an AMC holder since last March and want it to thrive, but all these price prediction nonsense has got to stop. Making yourself more useful and devote your videos to advocate the real message we need, and that is each and every one of us in this movement need to chip in our share of effort to help push for market reform and hold the administration and lawmakers accountable. Start writing to your congressman, and to the White House. The corruption of this stock market needs to be put to a stop. Dark pool abuse and payment for order flow have got to stop for things to really change. Yeah, write your congressman. That always works. Jesus. The establishment completely controls the price. The establishment can relieve shorts of any obligation. Retail will hold the bag. I mean, I don't 100% agree with this rhetoric here, but I agree with the overall comment. Let's be real and not stuck in a dream state. The moment this hits 1 to 5K, a lot of us will sell majority and hold a few shares to see how far it goes. I mean, that's not going to happen. I mean, really like what you're doing with the thumbnails. Can you do something from Liar Liar? What? That's a double-edged sword. You say not to be too greedy and take your money off the table too early. Isn't that being greedy by definition? Oh my God. Be bold and hold. Diamonds are forever. People need to go to jail. I knew there was a reason I didn't resub to you. Feeding hopium to fools for views. Y'all need to go watch Roensch for a sensible take. Ha! Oh my God. So now everything that's possible is hopium? Tomorrow might be nice enough to go swimming. Damn, there's that hopium again. LOL, it's stupid and childish. If y'all believe that 100K target, y'all definitely failed in math class. Be realistic with yourselves and wake up. Spam, comment, no, not even a reply. Ken Griffin with the clown face. You got a video with 165,000 views. $1,000 AMC coming very soon. Dated a year ago. Yeah, they have all their old shit on there still. Fucking goddamn grifters. AMC, oh my fuck, here we go again. More fucking positive hype. I'm not negative minded. I just need some positive things happen in my portfolio from listening to this positive BS that takes us nowhere. Oh my God. Can't even hit 100. How the hell are you going to hit 100K? See, all the good comments get relegated to the bottom. Anything that's not super bullish goes to the bottom. Can we get back to $15 first, please? 100K. Y'all crack me up. No 100K. That's dumb as fuck. They killed it at 32 last month. Keep lying to everyone. He's talking about the squeeze. It's based on how much everyone holds for. You will crumble. He's talking about the squeeze. Oh, right, the squeeze. That they're just going to magically make happen for no reason whatsoever. A lot of bag holders if you think it'll ever get to 100K. See, all the good ones at the bottom. This is comical. We are at $12. That was one of the worst videos I've ever seen in this whole thing. I'm not gonna lie. Did they just cancel the squeeze? Well, I thought it was scheduled for tomorrow at 2 p.m. Let's see what AC has to say here. He's got a master's degree in financial markets, supposedly. Master's degree in trading.
When you see a price action like today with AMC, all right, when you see stuff like this on the chart, down at some point more than 5%, almost 6%, based on what? Based on nothing, etc., etc. They keep constantly, having stuff out there that just don't make any sense with the price action and what is happening behind the scenes.
It doesn't make any sense?
These,
they say, fat man, fat man. Fat man, you don't know what you're talking about. Fat man.
These talk because the reality is
he needs to put more videos
selling,
out.
But the price keeps tanking, And something really also interesting, which ties back to this, is around, this publication from Peter Hahn, portfolio manager. For your info, I had someone I regard as a hardcore AMC owner privately tell me he heard from contacts that dark pool participants wanted to keep
What is this nonsense from Peter Hahn? God, this guy needs to be investigated. Who the fuck is this? Peter Hahn, quote unquote, Peter Hahn. A dark pool participants have wanted to keep it at $150. Oh, what does that even mean? And he's got spelling mistakes in all of his tweets. Participants is misspelled. He misspellings all over the fucking place. I think this is a 15-year-old. I think it's a 15-year-old posing as Peter Hahn. And he chose somebody in Canada because most of the apes are in the United States. And they don't know anything about Canada, and they're not going to bother to actually vet who this guy is. Oh my God.
$50 a share. That was likely meant to influence institutional owners. Price anchoring attempts are ongoing, which tells you that this play is real. Earlier this morning or earlier this afternoon, I posted a video where I was telling you guys, about a report that Bank of America put out today, actually, where a bunch of quants. A quant is somebody dealing with data all day long, all right? So that research team came up with a conclusion that retail investors are better at stock picking, at picking stocks that are going to run and making a lot more money in those than hedge funds. They took a bunch of data and they compiled it and they came to that conclusion. So, and I was telling you in that video that it now makes sense why they will do everything in their power to prevent us from actually getting our money.
Where is that source? Retail investors are better at picking stocks. Really?
To winning this battle because they know we are right. Just look at the amount of people buying and not selling, even though the price action doesn't make sense. And we have people like this having contacts, because, there are people in AMC having like 10,000, 16, 15, 20, 30,000 shares. Yeah, people with money. And those are not selling. So, it speaks volume to me, right? And those people have some contacts, and some of them is saying that, hey, they wanted to keep this at 150. They want to do whatever they have in their power to maintain this to a certain level that will feel like nothing is happening. But something has been happening and something already has happened. And it's just a matter of time before we come to the manifestation of that. And that's why he's saying...
Oh, he's going to manifest it. Okay, I see. Well, here it is from Market Watch. Are retail investors better at picking stocks than hedge funds? Bank of America says the answer is yes, from today. So, right off the bat, you have a mainstream media article that is pitting retail investors against hedge funds. And who's saying this? Oh, Bank of America, of course. Everybody loves Bank of America. A team, Bank of America Global Research Quantitative and Equity Strategists, 300 pages long. One of the first investing myths addressed in the report is whether retail interest in a stock serves as a reliable contrary indicator. That is, if rising retail interest is a sign that a stock might be headed for a rough patch. Much to the chagrin of the hedge fund industry, the B of A strategists found that this isn't exactly true. Instead, they found that retail inflows, on average, have been better indicators of performance than hedge fund flows, if only slightly. Okay? If only slightly. There's the qualifier. In fact, returns following periods of retail inflows have been above average, and returns post-retail selling have been below average, and retail flows have been slightly better positive indicators than hedge fund flows. Stocks with strong retail inflows tended to outperform their benchmarks over the following 4 weeks by 1.1 percentage point, compared with 1 percentage point of outperformance for stocks with inflows from hedge funds. So it's literally 0.1%? Are you... what? And look, institutional is six tenths higher than retail. But of course the headline is retail is better than hedge funds. This is garbage. Wow. I mean, yeah, that's a hell of a stretch right there. But hey, if you want retail investors to put money into the market, especially at a time when the economy is tanking, hey, stroke their ego a little bit. You all are 0.1% better than hedge funds. How does that make you feel?
Anchoring attempts are ongoing.
Oh,
they want to give us the impression that we hit a ceiling, like we hit the floor, like what we had in mind. Our expectations were not
ceiling or floor,
are not as high as things are in reality. Because if they can find any way out of this to minimize the risk and to minimize the losses, they will find it. Because them paying us at $150, them paying us at $150 a share, it's way better for them than paying us at 500 or 1,000. Yeah, it's way better for them. But will they succeed?
Shit.
No, because the further they continue, and stuff like this tells me that, hey, they're in panic mode. They have been in panic mode for the last,
dumb,
6 to 12 months now.
Illogical
and they've been trying to scare us out of this play. But the more they continue, the harder they try, the more convicted we are, because it means we are on to...
what if, let's just take a contrary view here. What if that's not the case? What if that's not the case, actually? What if they're playing you? What then? Oh, but they would never. Wall Street would never do that. They would never do that. They're known to roll over and show their weakness. Yeah, that's it. I mean, I've never seen a group of people so deep in a delusion and unwilling and seemingly unable to even consider an alternative viewpoint. I've never seen this. Never seen it. I don't know if it's ever existed. This is like, I'm sure it did back in 1929. And other times of extreme bubbles, but in my lifetime, I've never seen this. I don't know if we ever have. I don't know about the .com bubble. Probably more on a wider scale, but in terms of, I just don't know. It's wild.
something, and something big. All right? And something big. So, yeah, I don't know what to think and say, but rather than just, yeah, I'm hanging in there, folks.
Because of what a bank said. Because a bank, I mean, I'm going to have to look at the whole research paper, I guess. 300-page piece of shit, but and then, yeah, this just goes into other details here, but corporate buybacks, yeah, that'll definitely save the market. Yeah, what? You know, he might be part of the Russian propaganda. He looks like he could be Russian, if that's actually him. Could just be a random person, random avatar, random picture. Grab it from Google Images, and you know, they just canceled the squeeze. Oh my God. Morgan Stanley warned something massive coming. So this guy is obsessed with the banks, and he probably is listening to Lou. Probably is. I want to see. Oh, all right. I'm going to do it. This is against my better judgment. I'm really curious to know if this video by Short Squeeze Channel is worse than the video by Tom Fuzzulo. Because that's going to be a tough match. Very similar characteristics, level of FUD. But we'll see. We'll see.
Logical weapons.
Oop.
Many of you have already seen that Trey just made another video regarding the AMC stock price, the potential, the limits.
This guy just sounds like some kind of villain. He sounds evil to me. If that's possible, like many of you have already.
And there's a lot of controversy going around. A lot of people are upset. You know, you have a few people who agree with him. So I'll give you my input. We'll talk about it since it's relevant to the movement. So that's what we're going to talk about in today's video. First, I have to say this isn't financial advice. I'm not a financial advisor. I do have to say that. And also, like the video, share it for the algorithm. Get the word out if you are passionate about this topic, as every single ape that I know is, because obviously you're talking about our price targets for the MOAS. So this is a very controversial topic. So first, I want to briefly show you that months ago, I gave my opinion on Trey. This was 3 months ago. Okay, Trey's Trades, The Secret Life of a Double Agent. So the title speaks for itself. I believe anyone who's appearing on CNBC, anyone who has a direct line of communication with the CEO, and I've never made a secret about my viewpoints on Adam Aron and what I think about him, right? So anybody with a direct line, as I said, and anybody who's pitching for share dilutions and things of that nature, they're an insider. They're one of them. They're not one of us. At a certain point, they may have started as one of us, but once...
Us versus them. Classic cult language. Classic cult language. This guy is a cult leader. 100%. He's a classic cult leader.
You get up to the 400,000 subscriber level, you're a millionaire. And he's openly said that he's made millions of dollars off of AMC options last June. And you guys don't understand or don't know how many direct messages that I get from, you know, retail investors, AMC holders of all kinds throughout. And that's one of the benefits of having a channel. You get DMs with really good, credible information. Some of it is people asking me to talk about a certain thing, and some of it is stuff that I don't know about that they're bringing to light. And I've had more than a few people tell me that they've heard him on live super chats talking about either buying puts or selling out of their position or not having any more AMC. Okay, and I've heard this from a few sources regarding Matt and Trey. So this is what made me do the research and eventually come out with this video. It was DMs like that from people like yourselves who were telling me that they can't be trusted. And obviously they make videos, they do what they do. You could either watch it or you don't have to watch it. But what makes them dangerous is exactly what just happened.
Dangerous. Okay, this is coming from the guy that said that this is more serious than cancer. More serious than cancer in one of his propaganda videos. Oh my God.
Is when they start putting out false price targets and they call them price anchors. It puts a psychological anchor in your mind thinking that the price can only go so high. And this is a very powerful weapon because when MOAS actually starts, it's already difficult as it is to hold a stock for so long and to see the price go up and down, up and down. And then when you finally see a price, when you're in profit, when you've been in the red for so long, some people might be inclined to sell. And part of the reason is because of such price anchors. For certain influencers talking about this is the cap, this is as high as it can go, $300. It's not going to go over 1,000. Like, believe me, these are all psychological weapons that they employ. An issue
that is a non-issue.
There's a good likelihood that some of these people are paid by the hedge funds to let out these psychological weapons. And that's what I warned about 3 months ago. That's the danger in following some of these types of people. When they put these psychological anchors into your head, it's hard not to be influenced by them when the emotion of the MOAS and you see the price going in wild movements, it can literally affect you and almost possess you to press that sell button.
What about the psychological pressure of telling people to hold to $100,000 a share? And what if it causes people to lose all of their money? And you've literally done something worse then. You've done something worse than to tell people, temper your expectations. Don't be greedy. I mean, what it says is that this guy is more of a psychopath than any of the other mainstream influencers. That's what that tells me. Even though he only has less than 9,000 subscribers. But to say this shit, I mean, and put it and spin it like you care about people is it's so fucked up. It is so fucked up.
Prematurely. So, if you look here, I also put a video out 2 months ago. Trey says buy puts, and this was when he was telling people to buy puts.
Oh my God!
Okay, so there's a lot of fishy stuff going on. At the end of the day,
how dare somebody buy puts and make money when a stock goes down? Oh my God, he's the devil, I say.
Have I talked to the guy? No, I haven't. Do I know 100%? No, but I do know I have my instincts and I have my logic. And again, I have people sending me correct information that they've heard. I don't watch his channel, so I wouldn't know what he says, and I don't care. But I do have to just give the warning. Don't let anybody influence your individual price targets, and that's what this is about. Okay, you're an individual. You're intelligent. You have, the experience that you've had over this past year. So your price target is your price target. Don't let anybody else influence it, especially someone who's on the other side. So let's take a brief look. I'm not going to get into his video or play it or anything like that, but if you just look over here, he lays out his price targets and why he thinks $270 is most likely the price target. And he said, this is phenomenal. You should be happy with the $270. And that's what has people up in arms. People haven't been holding for a year over $200. People haven't been not buying other stocks and only putting money into AMC and GME for $200, right? They're doing this for life-changing wealth. So when somebody says $270, you should be ecstatic with that. That's going to anger you, right? So he's saying there isn't enough money in the world.
I mean, we don't even need to go into why that's all foolish, but fuck.
Or enough money in the markets to cover a $100,000 stock price, right? Because that would be $51 trillion. And he's also asking the question, who says the DTCC insures up to $70 trillion? Where is this figure coming from? So he's making these types of arguments. You see, where's the money? If the money, who pays? If can't pay, where's the money, et cetera, et cetera. So he's saying that if the MOAS actually happens and the stock reaches astronomical prices, the only way that it can be covered is a partial payment by the DTCC, and the Fed would have to print more money. So I'm going to tell you why I disagree with this. He's under the assumption that if it hits 100K, all 515 million shares outstanding would be 100,000. And nobody is saying that that's what's going to happen. Okay, we have something called the geometric mean. Okay, which means
the geometric
that possibly
mean.
10 shares could be sold at 100,000, or possibly 1,000 shares could be sold at 100,000, or 10,000 or a million shares could be sold at 100,000. But no one is saying that all 515 million shares out there will be $100,000. Will be sold at $100,000.
It sounds
that's what
so
the bell
angry.
curve is as well. All right, we're going to keep things simple and loose. We're not going to get mathematical about it. But basically what we're saying is, let's say this is AMC stock and right now it's $12, and let's say it hits the MOAS and this is $100,000. You see, people are going to be selling all along these points and including towards the tail end, right? Depending on when they decide to hit that sell button and depending on when they get filled. So you might have a few lucky people, or 100,000 people, or 1,000 people, 5,000 people, or a million people, or 100 million people get filled at $100,000. Anything's possible. But no one is saying all 515 million shares held, right, will be sold at 100,000. And that's what the geometric mean and the bell curve is stating. So his argument right there doesn't make any sense. He's talking under the assumption that every single share is sold at this price. Some people will sell at $100, some people will sell at $1,000, some people will sell at $10,000. So it's going to be scattered throughout. So don't worry about his price target or what he says. I know he was one of the original AMC YouTubers, but again, this guy's already a millionaire. He's pretty much set for life, considering where he came from.
Well,
right? So when
I don't know about that, set for life with $1 million. I mean, but he's probably not stupid enough not to reinvest. So yeah, probably.
I'm going to get into personal attacks. You know, I've had some responses from people saying that we're all in this together, and I guess to a certain extent we are. So this is nothing personal against Trey. This is just disagreeing with his price targets, and I just think it's utterly ridiculous for many reasons. The Volkswagen squeeze, I think Volkswagen hit $1,500 or $2,000. Chipotle is trading at 14.
Like 1,000 something, like a little over 1,000. I mean, euros, I guess, but anyway,
$1,500 right now. Okay, and there's so many other reasons why this thing can and will go way beyond $200 and something. So when you hear information like this that sounds utterly ridiculous, chances are the people who are talking about it have been paid and have been paid very handsomely. Let's take a look at this reminder.
Where's No Hope for Your Generation at? Where's No Hope 57? Where's No Hope 57? This is the one thing that this is the reason why I'm a shill right here.
Have been paid and have been paid very handsomely. Let's take a look at this reminder.
To point out here that we have come dangerously close to the collapse of the entire system, and the public seems to be completely unaware of that, including Congress and the regulators. So when the shorts cannot deliver the shares, the broker representing the longs must, by the rules of the system, go into the market and buy the shares at any price, pushing the price into the thousands. So as the price goes higher, the shorts default on the brokers. The brokers now must cover themselves. They push the price further up. So the brokers default on the clearing houses, and you end up with a complete mess that is practically impossible to sort out. So that's what almost happened.
So you may have heard this information before from Thomas Peterfy, the chairman of Interactive Brokers. And obviously he has a say in it because, as he said, the brokers will be forced to go out there and purchase the shares at whatever price they may be at.
Is that true? Really? The brokers will go out and purchase the share if... I mean, I want to listen to that again, actually. I mean, he's the CEO of a brokerage firm, so I would hope that he's right.
Let's take a look at this reminder.
To point out here that we have come dangerously close to the collapse of the entire system, and the public seems to be completely unaware of that, including Congress and the regulators. So when the shorts cannot deliver the shares, the broker representing the longs must.
When the shorts cannot deliver the shares. Right?
Of the entire system, and the public seems to be completely unaware of that, including Congress and the regulators. So when the shorts cannot deliver the shares, the broker representing the longs must, by the rules of the system, go into the market and buy the shares of.
So when the shorts can't deliver the shares, the brokers representing the loans must go into the market and buy the shares at any price. Okay.
Any price, pushing the price into the thousands. So as the price goes higher, the shorts default on the brokers. The brokers now must cover themselves. They push the price further up. So
if the shorts default and the brokers must cover.
So the brokers default on the clearing houses, and you end up with a complete.
And then the brokers default. Okay.
Mess that is practically impossible to sort out. So that's what almost happened.
So you may have heard this information before from Thomas Peterfy, the chairman of Interactive Brokers, and obviously he has a say in it because...
Right, Deliver is returning, but They can't deliver the shares because they can't buy them? Because nobody will sell them? I mean, maybe it's just his accent. I can't understand what he's saying, but
as he said, the brokers will be forced to go out there.
Okay, Model 3 dude is saying this guy has been proven. Now, who are you talking about here? Pederfy? Or Short Squeeze Channel? Or, because I'm trying to follow what he says, and I don't think it makes sense, but...
There and purchase the shares at whatever price they may be at. So he has a direct interest in this not happening. And yes, he was one of the brokers who took away the buy button last January as well.
So yeah, so why would you even fucking listen to what he says then?
It almost crashed the entire system. Not a hedge fund or hedge funds, right? The entire system. And keep in mind, the SEC, after they issued their report regarding this, okay, so they did do a report about this, they absolved short sellers in the GameStop report, which is complete BS.
Well, maybe it's not, though. Maybe it's not BS. What if it isn't? What if that's just a bad take? I mean... Contrary
they said there were no naked shorts. There was nothing nefarious going on. It was just a case of basically FOMO, retail, getting really excited about a stock, right? But they said it wasn't because of the shorts, and that's what this article is talking about. The SEC found, however, that it was positive sentiment, not the buying to cover, that sustained the weeks-long price appreciation of GameStop stock. So in a sense, they screwed themselves by saying this because, okay, you're saying that it wasn't a short squeeze, it was just FOMO. So while FOMO alone, GameStop was headed to quote-unquote unimaginable heights that almost crashed the markets. Now, what if you do take into account the short interest? And what if you do take into account shorts being covered? Then where would the price...
Well, okay, let's keep reading though, shall we? Carlos, it also rebutted a popular theory sparked by the unusually high volume of short selling in GameStop that some hedge funds were naked shorting the stock, selling without arranging to borrow the shares. The SEC said it found no evidence of this. I love when they keep shit on the screen like this and just cherry pick from these fucking articles. Oh, God.
Have went, according to Pederfy, infinite, because there's infinite risk when you short a stock. But of course, they took away the buy button. So I'm going to link all of this. This is the actual link to the SEC's webpage when they discuss this. And do remember, Ken Griffin was grilled about this, right? About many things, including payment for order flow and about a lot of things from the congressional hearings, right? After this report. And do remember that he said that he did not collaborate with Robinhood to have the buy button taken away.
So, Congressman, we often have my colleague who manages that relationship be here today instead. He has firsthand knowledge. We, of course, are talking to Robinhood routinely in the ordinary course of business. We manage a substantial portion of their order flow.
Well, I understand that, but did you talk to them about restricting or doing anything to prevent people from buying, not selling, but buying in GameStop?
Let me be...
Anybody in your organization?
Let me be perfectly clear. Absolutely not.
Okay, that's good because they got the lie out. They needed to get the lie out of him so they could hold it against him because it's on video now. So after this whole thing plays out...
Oh, fuck off. Fuck off. Really? Okay, yeah, they had to get the lie out of him. That's it.
And moving further, let's just take a quick look at what he said. He brought somebody who manages that account, the Robinhood account, because they manage a significant portion of their order flow, the payment for order flow system, right? And he said they talk on a regular basis because of this business relationship. So you talk on a regular basis, communicate daily, but all of a sudden when this thing happens and the buy button's about to be taken away, all of a sudden you stop talking to them? Does that make sense to you? Is that not a blatant lie? Of course it is.
They asked if Ken Griffin had talked to them. Wasn't that the question? Did you? And he said, we have a relationship. And he said, did you talk to them? I don't know. Whatever. He purged himself.
Of course it is.
Of course.
So they had congressional hearings about this. This thing crashed the entire market, not on a short squeeze, but on FOMO alone. A year later, millions, if not billions...
It didn't crash the market, though. It didn't crash the market.
Synthetics later... You know what I mean? The continued nefarious illicit activity by the hedge funds, by the market makers, the continuing hiding of these naked shorts a year and a half later, or whatever.
The naked shorts that the fucking article that you had on the screen refuted? Come on. How fucking amateur can you be? Right here. No evidence of naked shorting. I mean, you're a fucking clown. It's the only way to put it.
Significant portion of their order flow, the payment for order flow system, right? And he said they talk on a regular... And when this thing happens and the buy button's about to be taken away, later, you know what I mean? The continued nefarious... And I don't know about you guys, but nobody's selling. They're continuing to buy. they're going to lose. We're either going to win or we're going to lose now. There's no halfway, escape route.
Here we go. All or nothing.
How much deeper are these guys buried? They're buried beyond the point of no return. And again, as I've always said, they're going to fight to the death because that's what it is right now. What? There's no halfway, escape route here. They're either going to win or they're going to lose. We're either going to win or we're going to lose. And I don't know about you guys, but nobody's selling. They're continuing to buy. And if we own 90% of the float months ago, we own 180% of the float now because people are still buying. And this is just on paper, not taking into account the naked shorts. So the timing of Trey's price target video of his $270, video is telling. It could mean that we're close to the end. If they're that desperate, they're going to get the voice in the AMC.
Okay, so here's a take. Here's a take. Trey's $272 price target video, which was made clear to us by lottery stocks way back at the beginning of this video that it wasn't a target. He was just whatever. He used a Fibonacci and came up with that number as something. That's super bullish. That means the squeeze is around the corner. Yeah, okay. Just like every other catalyst that's failed. That's it, though. It's Trey, obviously.
Movement, right? He is the biggest influencer in AMC with close to 500,000 subscribers. That's a lot, right? And he's the mouthpiece for them. Remember, a direct line of communication with Adam Aron, direct line of communication with CNBC, with Bloomberg, with whoever. He's not one of us. And I'm going to leave you with this. This was 2008. Ken Griffin talking about how Citadel almost went out of business. Remember, history repeats itself.
A crisis so large that virtually every bank in America would have failed if the government had not intervened. Every bank would have failed. And after Lehman failed, we found ourselves fighting for our very survival. We were caught in the maelstrom. We were losing hundreds of millions of dollars a week, if not more. CNBC parked a van in front of Citadel, waiting to break the story of our demise. But we weren't going to give them that story. You see, each day, we took the steps needed to keep our business going. We sold assets. We closed business lines. We let people go. We suspended redemptions. Our management team absorbed $500 million of costs on behalf of our investors to demonstrate our commitment to the business and our belief in the future. And each thing we did bought us one more day. And day by day, we bought ourselves a future. Often the choice was between painful and more painful, but the one thing we didn't do was put things off. By the end of 2008, we had lost half our capital, but we were still in business. And we kept our team, and our team kept fighting to buy us another day.
The potential is unlimited, and this is a fact. This is not my opinion. Look up the definition of shorting a stock. The potential risk is unlimited or infinite risk.
That doesn't mean, oh God. Oh my God. Okay, there it is.
This is mathematics. Right. That's my only statement on that. There's no price target. Infinite risk or short squeeze play when you short a stock. And they say the potential profit and the potential loss. Shorting a stock is unlimited risk. So with that knowledge, set your own price targets. Don't believe anybody's price targets. Don't let them sink these psychological anchors into your brain. We know other influencers tried that earlier this year, $300. There's no way it's going to go to this. There's not enough money in the world. These are all seeds of doubt. Again, Chipotle's $1,400. They make burritos. Do you understand what I'm
saying? They
talking?
make burritos. Yeah, they actually make something that people like, and they're probably profitable. And how many locations do they have? I mean, okay, yeah, let's compare it to a random. I mean, God.
I'm telling you, you know the end is near when you have false prophets, lies, wars, rumors of wars, and all types of famines, pestilence. You know the end is near. So just keep your eyes to the sky.
Yeah, the end is near for you, the fucking the grifters. The end is near for the grifters. And
be ready.
Yep. God, oh my God, that guy is a piece of fucking work. A piece of work. Yeah, potentially unlimited. I mean, unlimited when the stock goes up for the shorts. But, I mean, do they actually forget the fucking stock has gone down? Like, why are you talking about unlimited losses for the shorts? How are you talking about unlimited losses for the fucking shorts? Seriously. I don't see unlimited losses here. I see very finite losses for long positions, but infinite losses for the shorts. Right. Right. Okay. All right. I'm going to do one more video. And then close this one down. But Jesus. Oh, my God. Must report shorts. Fed, we're about to force the MOAS. Yeah, right. BlackRock confirmed the AMC short squeeze. Okay, this is not short, and it's not sweet. And my voice is going out, but it is terrible. So, here we go. All right, let's kick it off.
Good afternoon, everybody. Out from Boston, making another quick video regarding Trey. I've gotten a bunch of emails on Twitter and whatever, YouTube and stuff about Trey's video. I won't reach 100,000 and all this sort of stuff. And I don't have a personal problem with Trey. I don't have any animosity towards him. I think he's a decent person. You know, he's a good guy, and you know, I think he's saying what he thinks, and there's nothing wrong with that.
Okay.
I disagree wholesale with what he says, but you know, I have causation for it. I'm not just gonna try to character assassinate him because I don't like him or anything like that. But let me talk to you guys about what he was saying, and let's kind of dissect what was being expressed here in this video, and then you know, we can discuss it. We can have a meaningful discussion and go from
discussion.
There. So one of the things my chief complaint, you know, I guess in the entire video series is how he looks at the market. So the first part is like, hey, the U.S. stock market is worth $49 trillion. The actual market valuation, the capitalization of the U.S. stock market is worth $49 trillion. Right, got it. We have that $67 trillion insurance policy within DTCC, as well as other avenues. I know that DTCC has insurance policy, and they also have a savings account with an additional chunk of money. There's a lot of money out there that's floating around, and that money is provided through market participants, through governments, to ensure that this thing stays alive and it doesn't die. Okay, long story short, I get that. Now, they're saying that because of the way the market capitalization structure works, AMC couldn't get to those high numbers. In a normal situation, that would be correct, right?
So the $69 trillion insurance policy from the DTCC, that's false. That's false. That's not that is not true. I don't know. That's some Reddit bullshit. That's something from Reddit, but I mean DTCC is you know, they're the clearing body. They handle debiting and crediting the accounts of the brokerages that you buy and sell from, and keeping track of who owns what. But they're not a regulatory body. They're not anything other than a clearinghouse. They're not an insurance company. They're a clearinghouse. So that's just not true.
Problem is this: it's the fact that we're not in a normal market, right? We are in a fucking bear market, like you would.
We're not in a normal market. We're in a bear market. Oh, okay. So there's a normal market, and then there's a bear market. Okay. All right.
Nobody wants to call it, but it is what it is. We all know what's happening here. We all know there's going to be a crash, and we know the market isn't functioning.
We all know what's happening. We all know there's going to be a crash. Oh God, when anybody says that shit, we all know what's really going on here. We all know. Yeah, that's a manipulation alert right there. We all know. You guys know the truth, okay? I don't need to tell you. You all know already. Fuck me. Lou just pushed out the cool out video. Well, we may have to look at that after this, and then
the same way it was not too long ago, right? Everything's ass backwards. Things are not making sense. We saw nickel at $100,000 a share. So what that tells me is that the vast majority of people out there, I would venture to say, don't believe this is a traditional market and it's functioning at the same level it should be, or even with a shred of integrity. So when a stock squeezes in a market and the market capitalization issue comes into play, we are talking about a dynamic push. Okay. Look at this. This is I just Googled this. You can do the same thing. Just type in on Google market capitalization during a short squeeze, and it gives you what really happens. You have the Investopedia decision, right? The Investopedia definition, which is great, wonderful. You can read it and see what it says and so on and so forth. And then you have what's the street, you have the street definition. What does the street definition mean? It means that when you have a short squeeze, a violent short squeeze, market capitalization can go far beyond what it's entailed in terms of the price and its shares and everything else. It's much, much higher. A short squeeze accelerates a price rise, and thus the market capitalization is going to go through the roof. Is it permanent? No, it's not. It's a short squeeze. It's a violent movement of the stock market. What that means is
I think that Trey's market cap point was probably not a great point. It's probably pretty moot, actually. It's not really a reason. It's an observation, it's a descriptor, but it's not really a reason why it's not possible. Now, I'm not saying it is possible, but strictly speaking, as a reason in and of itself, I don't think it's really that strong of a reason. So it's really not, if this is all he's going to say, then
it's not going to be a permanent fixture. It'll rise and go higher and higher and higher and higher. But is it going to stay the same? No, it's absolutely not. It absolutely is not going to stay that number. It's just that way temporarily during a short squeeze. It accelerates the stock price, right? The squeeze accelerates the price and the market cap goes up, right? And another thing that was said was, well, what would happen if we had to get paid? There isn't enough money in the world. Well, this is where you have to kind of pay attention to what Lou versus Wall Street was saying about payments. How do we get our money? How does this happen? Well, it's very simple, you guys. When payments are made, it's made through JP Morgan's crypto. We talked about that.
What? Oh, fuck. It's made through JP Morgan's crypto. I mean, this is some Mickey Mouse fucking bullshit. JP Morgan's crypto. That's what I want. So, but can I cash that out through Robinhood? Where can I trade that? Oh, God, what a bunch of garbage.
Lou said to us, hey, we're getting paid through crypto a couple months ago. Lou said it. And that came into pass. We literally just saw it. We literally just saw it on the internet the last, I don't know, like 8 days ago, 6-7 days ago, I would say.
What?
How JP Morgan is dropping Onyx into this play, and then
it did not say that. No, it didn't say that. This guy is such a fucking gaslighter. All these guys are dangerous. They're all dangerous. This guy, oh my God. We literally saw it on the internet. Well, Lou told us we were getting paid with JP Morgan's crypto, and then we saw it on the internet that they're dropping crypto into this play. Bullshit. I saw the article.
Onyx cryptocurrency is pegged to the US dollar. It's a stable coin. So the valuation of that money based on the valuation of the dollar, the GDP, is how we get paid, right? We talked about this. This is how they're going to do it. This is how everybody's going to.
How does that change it? If it's pegged to the U.S. dollar, that means it's backed by the U.S. dollar. How does that create more money to pay the apes? How does that change anything? It's like saying, oh, I'm not going to pay you in US dollars. I'm going to pay you in Tether. It's backed by US, pegged to the dollar. Well, that means it has to be backed by dollars. Okay, great.
Compensated. And when they do that, JP Morgan effectively owns a good chunk of those short sellers. Why? Because they're not going to be able to afford to keep their position and maintain it unless they have the cash ready to go and they're willing to liquidate shorts. Otherwise, the JP Morgan owns their ass. Morgan's picking up the tab on this from what it looks like through that cryptocurrency.
Oh,
based
God.
on what their holdings are with other funds. And I just don't think Trey understands that. I don't know if he was paying attention to what was happening in the news with Morgan and how these things were happening.
Probably wasn't.
You know, the market cap argument. I just don't believe that's a good enough argument. I just don't think it's right. And he brought up the calculator thing and everything else. Listen, you guys, this is not a regular market. We all know how this is going to happen.
This is not a regular market. Yeah, that's it's like short the VIX saying, wow, stocks just don't move on fundamentals anymore. What is wrong with Warren Buffett? He's stupid. I mean, fuck. It's not a normal market. Everybody says that. If you look throughout history, you look at 1929, that's what they said then too. It's not a normal market. It's not going to go down. This market goes up. We're different. This one's different. And it's never different. It's never different. The technology might be different. The participants might be different and dumber. But it's not any different. It's not fundamentally any different. And that's what gets people in trouble. Oh, it's different, and I can tell you about it. I know about it. Al from fucking Dubai, wherever the fuck he's from. I can tell you about it. I know. Lou, homeless guy in the park. I can tell you about it. Okay. Yeah, you guys are the only two that... Lou knows. He knew about the crypto before it came out in the media. Yeah. Then remember that article that told you that they're dropping in the play. Nonsense.
We saw what happened with the $1 trillion in funds and how they liquidated it. How all the big banks took money out of crypto. I think Bitcoin is under 20,000. Was it under 20,000? I don't know exactly what happened, but all these things that are happening, it's not a coincidence. The banks are liquidating their positions, putting up their own cryptocurrency, and creating secondary markets. Why? To peg them to the dollar and then have a massive, massive market cap, which will allow them to pay for this short squeeze. Remember, JP Morgan here is going to be the winner here.
Complete nonsense.
Because they'll be able to own all the hedge funds. They'll be able to take the debt, keep it as their own, and if they screw up, hey, that's their ass. They own them, right? But everyone's paying up to Morgan because they got the money to pay for all this whole mess. And that is what is amazing about this. So that's why...
That's what's amazing about this. That's what's amazing about this. JP Morgan, they're so amazing. Yeah, Jamie Dimon is going to fucking pay you. The same guy who says that there's a hurricane coming towards us, a financial hurricane, just down the road coming our way. He said that recently. I mean, you have to be fucking stupid. You have to be truly ignorant to accept what this guy is saying. You do. I don't see any other way around it. This guy's a gaslighter. He's a grifter. He's a fraud. And he has his comments turned off. Why do you have your comments turned off? Well, I counted about half a dozen things in this video alone that are incorrect factually. And you can bet your bottom fucking dollar. If comments were on, I'd be calling his ass out. Ridiculous.
Issues are not going to be a problem. It doesn't matter. None of this stuff matters. They're going to get paid because they're just going to print out the money through a valuation of the US dollar in a cryptocurrency. That's what I don't think Trey understood. I don't know if he's paying attention or if he knows about Onyx.
What an arrogant fucking prick. I'm not sure if he's not paying attention or what. I don't know. Jesus Christ.
What's going to be happening?
The apes have no fucking chance. With these goddamn grifters, the apes have no chance. And it's so infuriating and wrong. Watching this fucking train wreck in slow motion. It really is. It's fucked up. It is so fucked up. Oh my God.
But we talked about it on my channel. Lou brought it up in the first place, and that's how it's going to happen, right? So these arguments are from like last year, and I don't know if he's been keeping abreast of what's happening in terms of inflation and everything else. This actually, this way, believe it or not, with Morgan pegging the dollar to their crypto, it actually fends off inflation. Otherwise, he would be correct.
You.
His original thesis would be correct. The problem is this is not a normal market. Everybody knows that, right?
Yeah, that's magical thinking right there. That's a form of magical thinking. Well, normally that person would be right, but see, it's different because of this magical element. This magical element that just erases inflation. It just erases inflation because it's not a normal market. He's a vulture. He is a vulture, and he wants to dish shit out. He'll dish out insults and, this is last year's argument. But he can't take any heat. He's a joke. He's a total fucking joke. I don't even know if he's an American citizen. I don't even know if he's in this country. We don't know shit about this guy. We don't know shit about this guy. I mean, his email address is like Al from DC or something, and it's his Twitter handle too, I think. And it's like, okay, so I'm going to assume you're not in Boston or DC then. Al from Hyderabad.
And listen, this is not me taking a swipe at Trey. I actually like the guy. I think he's a sweet guy. I think he's a decent person. I just don't believe he understands the entire background of what's happening here. I just don't think he knows that. And like I said, Trey, if you're listening to this, I'm not taking a shot at you. I just don't think you understand what's happened with Morgan in the last couple of months.
I'm taking a shot at you,
They're the
Al.
prime lender, right? Morgan's the prime lender for Citadel. That's how they're getting the money to short this stuff. All right?
You don't even know that Citadel's shorting it. You don't even know that Citadel's shorting it. What the fuck? This is the worst of the worst. That's why he's at the fucking top.
An eye on him, and guys like Lou and
bug-eyed motherfucker
and Bill have been keeping
damn
tabs on it through ex-employees and stuff. We know what's happening. We know how it's going to get paid. And a 267 price tag, I that's just ridiculous, bro. It really is. It's just ridiculous. I still love you. I still got nothing but love for you, buddy. I just don't think you're right on this one. And I hope you're doing well. Either way, that's all I have. If you haters were looking for,
I hope you're doing well either way. I mean, come on. He's a patronizing asshole. That's what he is. He's a patronizing asshole. Swami Bob.
Sorry, I don't do that. I try to keep things gentlemanly as possible, and it is what it is. So I hope you have a great day, and I'll talk to you guys too.
See you on the moon. God, oh my God. That's so ridiculous. So ridiculous. You're going to get paid with JP Morgan's fucking crypto. Yeah, right. Okay. Right. All right, let's see this Lou versus Wall Street video. Yeah, he probably does work at a fucking call center. Oh man, this is so long. I bet half of this is him being a fucking jackass.
What's going on with you little motherfucker? There you go.
He's getting tired of this. Look at that. He's getting tired of this.
What's going on with you little motherfucker? There you go.
There you go.
Wait, all right. Let's just have our little conversation here. First, let me start out with a public message out there to certain people. Doesn't apply to you, don't take it. Look, there are people that would like to send over information over to me. Here's my thing. This is a stock play. I don't need anybody to send me over secret information or information you gather. First of all, I don't know you. I don't trust you. It's just one of these things. Second of all, that's not how I work. I came up in this business doing research and gathering information for people to make plays or recommend plays. So
financial advice.
As far as people trying to give me information on this play and if I give it this is going to corner this, let me just tell you something about this play. If I'm not my normal lovable self, I'll get there. This play is already poised to run. This play has no fucking shares out there. This play is also facing the reality that a market is out of control, a market is drying up with money, and at the end of the day, it doesn't look good going forward. Now, let's take it up a step further. There are institutions that are in trouble because they were fucking doing wildness while things were good with money. Things are not good with money. So in many ways, the effects of 2017, 16, and so on, back then, up to 19, is creeping over. We just had a pause for a while. Then there's something else that you saw it today, but tomorrow's news today, when I said the shit was pushed over to the fall, to November, now all of a sudden you have the SEC talking about that they're going to stop front running. For all the motherfuckers that don't know what that means, it's very simple. You see our brokers, okay? That means they're not going to be able to run into the devil. What's up, devil? Okay? And you motherfuckers, when I go like this, what's up, devil? I think you better fucking think like 2 times over.
That's not
really
front running.
Saying, hello, devil. Anyway, when
that's not front running. Whatever
happens, which is going to be in Q4, which is at the end of the summer. We're at the beginning of the summer. That means it's a little bit of time until they can no longer route shares over to the devil. Okay, they can't just send it to the market maker. Gotta go to the exchange. Now the funny thing is, everybody's like, "Oh yeah, we'll believe it, we'll see it, whatever." I don't think you motherfuckers understand. Like, it's all fun and games in YouTube, and we have a laugh and shit like that. But on that side, shit is being taken very seriously. So I'll just leave it at this: they're going up against a wall. That wall is not friendly to the type of business they've been doing. So let's back it up. There's no reason to send me any information because 1, I don't look at attachments. 2, I don't engage with people that I don't know. And at the end of the day, like, this is a YouTube channel where I give my opinions on what I see, my conclusions, or even what I hear. Like, I hear things like, certain orders today where instead of being actual shares were turned to fractional, orders not being processed, market slowing down a little bit as far as the broker, as far as like holding up orders. That spike after hours, look, those are things I point out and I go, Then I talk about the things as far as like the crypto money. People don't understand that. I try to explain the best way I can. Wall Street created their own money. What they're going to peg it to as far as the dollar, they'll peg it to the dollar. The digital dollar, then the dollar, which will run the same. Then eventually, one of them is going to go goodbye, and it ain't going to be the digital dollar. What does that mean? That just means that they're going to have the flexibility to pay us. Now, are they going to try to give you $18 billion a share? No, and neither would I want that, because then that would mean the dilution of money, and then that means that this was all for nothing. I want to make a good amount of money, but I'm not stupid. You can hold to whatever you want. Like I said, on that day is the one day where we all separate, do what we feel we have to do, and then we come back later, and at the end of the day, I pray that everybody got their order fulfilled. The reason I said the first part is, look, this is, and I've said it before, this is a dirty play. It's a dirty play. There's a lot of dirty people out there. And at the end of the day, it's one of these things where, look, not everybody's happy that obviously I'm still around on YouTube. Whatever.
The devil,
and even if I was to leave
he's not
YouTube
happy.
Today, the people already understand how orders were being, and how they are now being routed and held and everything.
Held.
The SEC has
Orders
got
held.
That information out there. You know, he's explained that over to you, so it's there. You know, I think now retail is much smarter than what it was before. That being said, one of the tricky things about YouTube, Reddit, and all the social media things, sometimes you don't know who you're listening to. You don't know where the information is coming from.
Oh!
You don't know what's their motivation behind something.
Whoa! So whoa! What did I just hear? You don't know where the information's coming from. Funny, I was just saying that about Al. I think Al likes Lou more than Lou likes Al. I don't even know if I've ever heard Lou mention Al's name. But Al mentions Lou all the time. All the time. Funny. Got a man crush on him.
Be careful you get their information, because at the end of the day, you don't know people's ulterior motives or who they're connected to. The other side doesn't want us to win, and we don't want them to win, but eventually somebody's going to lose. That's how it is. That being said,
ooh, I actually like that. I might have to use that.
To win, and we don't want them to win.
I actually like that
phrase. Ulterior motives or who they're connected to. The other side doesn't want us to win, and we don't want them to win, but eventually somebody's going to lose. That's how it is.
The other side doesn't want us to win, and we don't want them to win, but eventually someone's going to lose.
That being said,
brilliant.
We don't have to do a fucking thing anymore. This play organically is going to have its rip, because there are too many things that are needed in order to keep this in that cycle, or those algos are moving money around that move shares around in order to keep it going. Now, with volume slowing down, money drying up, it's hard to fuck around and do what they've been doing. You can't suppress the entire market and all the fires and chaos that are coming and still continue doing this. It just doesn't work. And even with the new crypto money, there's only X amount that they can do. People ask me, well, could they use the money to against us? And I'm like, no, because based on what I've seen, at the end of the day, it behooves them to use it as a, you give us money, we give you crypto, you sell your problems, because that means whoever's issuing the crypto is sitting on a lot of cash, and that cash could be used to help.
Well, I stand corrected. He hasn't fucked around at all in this video. There's been absolutely zero horseplay. I'm actually shocked. I mean, I'm kind of thinking that it's going to shift to like horseplay for the rest of the video. But his tone is different in this video, for sure. I mean, it probably doesn't mean anything. He's probably just high. But, you know, that sundial, man. Weird.
About themselves and their fires, or make some money on top of it. So maybe a little bit too complicated, but at the end of the day, as far as it being used against us, I don't see the way. If anybody wants to show it to me, you know, make a video and explain it. But you know, as far as sending it over, like, look, I figured it all out, and this is the information, and my cousin works over here. I'm like, I don't do those things. Trust me. I came up in a research think tank.
What?
We used to get information for people to back up recommendations or investments. And people started getting fucking crazy and competitive.
What, like a boiler room? Or like a scam? Like a I came up... Okay. And we know how that ended.
Started looking for information in ways they shouldn't have. And a lot of those motherfuckers went bye-bye. You know, when I mean bye-bye, it's like... Okay... Will everybody rise? Raise your right hand. That type of stuff. Look, here's my thing. There's no reason for us to feel crazy or phobic or anxiety on this. This play is a squeeze play. Has a lot of characteristics of wine, if you would. The older the wine, the better
wine?
The wine once it's aged. Squeeze play. Yes, they oversold. Yes, a lot of people came in. Yes, I get it. But guess what? that still makes it possible to make a lot of money compared to a play that just goes $1 or $2 or $3. You know, you use a little bit of money, you bought some shares low.
Oh yeah, you know what? I actually agree. It definitely was. But again, like this overhead supply up here, you know, let's just blame Trey. Blame Trey for this, since he's getting all kinds of hate today. All of this shit that was bought up in here, this is so many shares. This is like, you know, 90% of the float right here in this region. You know, it'd be nice if they would hold to 100,000, but let's widen it out to this. I'm gonna widen it out to that even. Man, that's a lot. That's a lot of shares. That's a lot of shares. Up there. A lot of shares you got there.
You're gonna sell it off.
I got 14,000 shares.
$1 and 100,000, like whatever. But understand something. Squeeze plays are different. You know, people look for these kind of plays. You go through years. There's always little ones, but something like this, never. It's okay, it took time. Some nefarious motherfuckers are out there. More than you will ever know, more than you should ever know. So, this video is to say, be careful, calm the fuck down. All the same things that I've said before. People go, oh, he says the same thing. I'm technically speaking, because the same things are the fundamentals of this play. That ain't the real price. That line is bullshit. They're stacking the orders. They're playing in the dark pool. They're fucking doing ping pong. Nothing's going to the fucking exchange. And at the end of the day, there's a lot of people on the other side that are working together in order to make sure that retail gets fucked. That's just how it is. Tell me how I should change that. But the one thing that I've always said from the beginning is that they're fucked. Because at the end of the day, they still have to cover. And when they cover, they have to come to us. And they have to go through that vicious cycle of finding those shares in order to fulfill our orders. So when people, you know, leave those comments, I just like, whatever, block. I learned how to block now, so I'm like, block. You don't need all that fucking secret squirrel shit. It's not necessary. Not on this play. And what are we going to do with that information? Really? What are we going to do? I can tell you, I really don't give... It's a stock play. Like, relax. Okay? And people that deal with that type of information and getting in and figuring things out, like, let me tell you something. There are a couple of motherfuckers that I highly respect that they've been able to take information and make it worth a lot. But guess what? There's nothing secret about this nonsense. They oversold it. We bought, we held. And then there's going to be a day where they're going to have to buy back. I mean, I'm sorry if it's that fucking simple. That's the way it is. All I did was I introduced a lot of the pieces and stuff like that happened. But at the end of the day, it's no big deal. I'm not having an anxiety attack about it. I wish I could talk about other fucking things. Like, right now, AMC is a park play. You know, whether I add, I don't add, or anything, it doesn't even fucking matter at this point. It doesn't even matter whatever for you. That's why I said this, as far as like, whatever you're going to do, you do your own thing. Okay? Nobody on YouTube or Reddit or Twitter or whatever the fuck, Discord, nobody's going to make it run. Okay? And be careful, motherfuckers, like I said before. Like, don't send money to people. Don't fucking do stuff like that. That's crazy world. You're an investor. You put money in a play and you understand the dynamics of this play. And the dynamics of this play is that they will have to cover their shorts. That's it. Done. It's been like that for years. I know they've done a lot of fucked up things in the synthetics and Guatemalans. They've done shit like that before. And obviously we're one of those where they've done it. I mean, what are we, number one right now? Pretty much we're the number one top position in this shit. So hang tight, motherfuckers. I love you. I hate AMC.
I love you.
I'm in this thing with you. And
here, have some emotions.
At the end of the day, it's just like, this is gonna run. What numbers it runs to, that's a different story, because that's based on human emotion and what people hold to and whatever. And once they have shares, they're gonna fucking attack you, you know, because it happens. I would attack you if I was on that side about to get vaporized. So I'm just being honest with you motherfuckers. Love your pieces. You know, I know a lot of you motherfuckers. I've seen your comments and I've been with you from the beginning. And you've been with me since the beginning. We're okay. Just leave it at that. So maybe I'll pop up in a few minutes. I don't have any motherfuckers left. So that being said.
Okay.
And like this is a one specific person out there. So I love doing that. So bye, Lou. Thank you for the message.
There's the horseplay.
I'm never gonna get into that one. We're okay.
Al from Boston had a guest on today, and he said this play isn't just about AMC. It's about the hedge funds wanting to play this devilish game they've been playing for years. If this goes belly up on them and they lose, it's the end of their decades-long cash cow. So, yeah, whatever the fuck Al was peddling earlier. I'm going to play this video. I have not watched it, but it's recent, and I'm just gonna let this play out to the end of the stream. It's like 9.5 minutes, and that'll be it. So. Understanding overhead supply, and that'll be it. So yeah, I'll kick the song, and we'll be done.
Overhead supply is areas where people bought before at higher prices, and could be areas where they might sell if the price rallies into that area. So now on Tesla, you go, okay, where does overhead supply start? Well, it really, again, I go back to drawing my lines. I make it simple, and I look at lows that the stock has made in the past, and it looks like a lot of lows were made above 756. The last real good rally was off that 756 area. Prior to that, it actually went down to 700 on one day. And then back in January, it hit 792. So I'm saying that the majority of the overhead supply in this is really above, 756. And so now once you're below that, you've got there's 3 months, there's about 6 months of overhead supply in this stock. So every time it starts coming up into those areas, like 756 and higher, you're being faced with people who are making decisions of, I've been in this stock for 2 months, 3 months, 6 months, and I've been down on it, and now it's come back close to where I bought it, or it actually came to the price where I bought it, and they start thinking, hey, maybe I should sell out of it. So it's something that's real, that's something that's above you, that you have to be aware of, because there could be selling. It could limit the how far the stock could rally. Sometimes it takes there are two things that have to happen. Either it has to take a lot of volume and a lot of demand to push it up through that overhead supply and power through that, or it's got to take time. And that's why a lot of these stocks that we've been going over that are down, again, 50, 60, 70%, these things are not going to come back for a long time, if they come back, because it's going to take time for those people that bought at higher prices to either finally realize they've got a loss and actually take it. And so that it just takes time, and it takes months, if not years, for a stock to come down and base and base and base, and all that overhead kind of disappears after about a year and a half, and then maybe can reinvent itself, have a new product cycle, and then have another move again. So once you start the overhead starts piling up, then it just gets harder and harder for it to get through. So, and then also the bigger the volume in an area, the longer time that it's spent in that price range, the longer and harder it'll take to get through it. Let's go to that AMD example that I used last week. So here's an example
damn, I
where
thought
I
he was going to say AMC
on an undercut of the low and down in that area, and it rallied. Look, it rallied right into 100, and look how far 100 is as a resistance. I mean, if David, you can draw that line, just draw a line straight across 100, just to show how long that is. So that, if you count the quarters, that's 6 months, that's maybe 9 or 10 months of price action, maybe even longer than that. Yeah, about 10 months of price action that stock traded above 100. So you've got all those people, you've got all that volume that it was above there. And you see how it came and it went right into resistance. When I saw it starting to reverse off that the next day, then I sold the whole thing out, because that's a wall. And just think, I mean, I don't know if it's a good analogy, just think of it as blocks of cement that are just being poured above you, that are hard to get through. And those can be good shorting points too, because you've got that overhead resistance. You also have a moving average. Moving average lines are coming down, and just think of it, it's a weight that is just pressing on the stock, that the stock has to power through in either one of two ways. Either the price and volume is super strong, or the time just wears out that overhead supply. And the other point too is that's the advantage of buying a stock when it's going into new high ground. You don't have all this weight above you. You don't have all these buyers above you. When a stock is going into new high ground, and you can just look at AMD when it's coming out of that base at 120, 120, 122 there. There's no one higher. There's no one above you that is saying, hey, I've owned this stock for a couple of months and I want to sell if it gets back up to it. Everybody's happy when you're into new high ground. And that's why sometimes these stocks can just run when they get into new high ground. There's no weight of overhead supply on them. So that's something to think about when you're buying a stock at new high. There's no overhead supply. Let's look at another example. Go to if you can go to Shopify, and let's see if I can. Yeah, Shopify. And if you look at the date, let's see, around like the February 1st of this year, the stock broke through. Just a few weeks before that, it broke through 1,000 on to the downside. And so what did you have then? The stock broke 1,000, came down to 800 or 780, and then rallied back up. Well, where did it rally back up to? It rallied right back up under a tremendous amount of overhead supply that started back. I mean, it goes back over a year and a half ago, or a year and a few quarters ago. How many times it hit that 1021, 1005, 1025. So there's another good example of when a stock rallies. Well, what's it going into? It's going into 1, 2, 3, 4 quarters of overhead supply. And then let's look at NVIDIA. NVIDIA, the same thing, just this was actually more recently on, it broke 200, and it looks like 208, 206. You can just draw a line just underneath that area going back over the last 6 months. And the stock broke through it on at the beginning of April, and then on May 5th, supply does it have, even a few points above it or 10 points above it. You can trade just about anything over a very short time period. But if you're going to be holding stuff longer than a number of weeks or longer than a month or two, you got to make sure you know where that overhead supply is if you're buying a stock that has been down. But most of the stocks that I'm buying, I mean, even the ones we've mentioned, I'm looking for stocks that are closer to their highs and not suffering under the weight of all this overhead. So that's just I think a good quick review of why you don't want to be buying stocks that are down, 40, 50, 60%. You just got a tremendous amount of overhead above you.
Hey, everyone.
Okay, and then I believe there is a video. Title of it here. But I mean, that's essentially exactly what I was describing with AMC. Let's see here. What's this called? Now, the guy's a little hard to understand. Got an accent. God damn it. Oh. This should bring it right up. There we go. Now, I don't know who this guy is, but
so what I wanted to discuss in this video is what we've been seeing with amazing, highly public short squeeze events. The key in that statement is not the short squeeze, but actually what I'm trying to emphasize here is the public short squeeze event. Why are these moves made so clearly obvious to the general public? Why? For example, take a look at GameStop. Big move here in January. We are all familiar with this amazing short squeeze, and the fact that it was being discussed by essentially everybody, including those who don't know what the stock market is. Why was it so public? Why was it the talk in every media outlet, especially the financial ones? What's the message in that? Now, from a technical standpoint, because I always do want to make sure I stick to the technicals, notice in all of this, if not most of them, it's essentially a one and done event. This event is more fluid, more powerful than the subsequent bounces. And the reason is very simple. Before the move here, you can see there's no price action here. In other words, the stock had not traded in those price levels. So this is an aspect of trading called overhead supply. In other words, if you own the stock in this phase, everybody was happy, giddy, excited just to own and enjoy this massive run. In other words, there were no disgruntled sellers. But now, after this plunge, and it was a serious plunge from a percentage point, this reversal here, taking the stock from, let's call it 460 down to the lows here of, I think was 34. This is a massive plunge. So all these people who are trapped here, all of them, we're talking millions of shares. All those who are trapped in that very powerful reversal are going to be sellers during this move to recover. So as you try and recover here, all of these people are just putting pressure and selling. And that's why it eventually cannot hold in theory. And it starts pulling back here. And then there's another attempt that ultimately also cannot sustain the upward momentum, and we see this drifting lower. In other words, in all of this, like I said, it's a one and done event. One and done. And I know many people are going to go and play this just from recent memory, because we are all so predictable. I mean, we really are. All of these people are playing the bounce, thinking this thing is going to 500, 600, 700, 800. Even the ones playing it this week are thinking that we are going to go back to this phase. But you have to understand overhead supply. In other words, when a stock is making all-time highs, there are no natural sellers. Everybody's just happy. Everybody's in the green, in theory. So who's selling? Nobody. And if you want the people in this phase to sell the shares to you, you have to tempt them with higher prices. And even that is not the reason for this video. The reason for this video is that big question: why are these short squeezes very public? And I'll try and answer that question towards the end. Let's take a look at another recent short squeeze. And again, I'm going to just go through them quickly. This is AMC. We are all familiar with this move in AMC in May and early June of 2021. Big move. And again, this is a one and done situation. We have to understand this. This move has a good chance of spiking. Why? Because there are no natural sellers. As you can see, nobody has bought this over the last 2-3 years in this price range. So as it moves higher, there are no natural sellers. It's a one and done event. So to try and anticipate the next bounce in the same stock is not how the game is played. It's done. Think of it this way, if I can put it another way. So let's say it's a ball. You throw a ball in the air. It's going to bounce. But with every bounce, it's losing energy. So this is the event you want to play. The initial throwing of the ball, quote unquote, is where you get the biggest move. The next bounces are going to be weaker and weaker, which in theory can explain why we see, yes, somebody is thinking there's going to be a bounce higher, but these bounces are just can't hold on. Why? Why? Well, again, overhead supply. All these people who are still holding are looking to sell and get out even. So every time there's a little bit of a spike in the stock, they are selling into that movement higher. And essentially, they are putting a lot of downside pressure in any attempt to move higher. Another stock here, this one, same one as AMC's AMCX. Nice move here. Again, one and done. Hasn't been back to those levels. No overhead supply here during the successful move. But every subsequent move since then, you can see that those who are still holding, those who timed this incorrectly, are natural sellers, and they are putting pressure and stopping any upward movement. One and done. Here's another one. Virgin Galactic, ticker symbol SPCE. Again, a very nice move. But this is the desirable move. The first move is desirable. And again, there's no sellers at this price. And so, when it makes an attempt to move higher here, this attempt has a problem. And that problem is overhead supply. all these people who held on, just made the mistake of holding a little bit longer, are looking for this spike to sell. And that's why you see that eventually prices roll over. The rise cannot sustain itself because of sellers. Overhead supply. Supply by those who bought at higher prices. Stops or slows down a recovery attempt. Again, very public move. All of this were just being discussed everywhere. Take a look at another one. This one also had a big run. I wouldn't say was as publicly discussed, as far as I'm concerned, not as much. But here's another so-called short squeeze. Right there, moving from 20s to 40s in about 2 weeks. BBBY, Bed Bath and Beyond, had a so-called short squeeze spike. This spike here. And again, this was successful. Why? We come back. It's a one and done event. One and done. Institutions are not going to keep playing this. They know the game. The game is done because now you have natural sellers. In this phase here, the move in January had no recent natural sellers. And you can see how every subsequent move higher could not sustain itself. So yes, tries to move here because retail investors are dreaming of this move. But you see, let me clear that. Yes, so you're trying to move here, but ultimately you roll over because of all the pressure coming from those who happen to be holding at higher prices. They just want to get out even. And the closer the stock gets to their previous entry level, they want to get out. And, by the way, as the stock starts drifting farther and farther away from their entry points, they become aggressive sellers because they're done. Cannot stomach any further losses. It's that overhead supply that makes it a one and done. Here is support.com. It's changed its ticker symbol over the last couple of weeks, if not over the last couple of months. But this was support.com. Big move from, let's call it, under 50. So under 50 went all the way to 525 in about a month. Big move. But you'll notice, again, it's a one and done event, people. One and done. Just keep that in mind. One and done. No need to chase. Once you see this in the news, let it go. Don't even bother. Why? Because the movement higher was more efficient because there was nobody who bought this stock at this price level over the last couple of years. There are no natural sellers at all. One and done. And let's take a look at the one that spiked yesterday. Huge spike yesterday. Massive. And this is Avis, or ticker symbol CAR. Big move. Big time move. Going from, you can even, if I take the breakout here, let's call it in the mid 90s, which is the breakout right here. Effectively, this is when the short squeeze began. So we can say that was in the 90s. Mid 90s would go all the way to trade as high as 520 over the last couple of weeks. Big time short squeeze. But again, the same theme that I've been talking about here is there are no natural sellers. It's important to understand why an instrument can spike. Nobody bought the stock at this price level over the last couple of years.
Nobody.
In fact, this is all data for this instrument. All its trading data since 1991, 1992. All trading data. This stock has never traded above 70 until this year. This is the high, 2014. So what I'm saying is you can see that there was nobody, absolutely nobody, who own the stock at these price levels. Above 70, above 90, which is the breakout right here, where the short squeeze begins. Nobody had owned the stock ever above 90, 95. So when it starts moving higher, there are no sellers. None. Everybody's happy. It's like they just hold on. What do they have to lose? They have nothing to lose by holding on. So they enjoy the ride. Now the problem becomes those who are going to attempt, because of this recent spike, to try and play the next bounce. So you're going to try and, this is going to, it's already pulled back. It's trading at 300 now. It's going to bounce. It's going to attempt one of these. But remember, the chances of these future bounces to be successful are very low because of sellers. There are people who just happen to hold on just a couple of minutes more than they should have, and now they are holding on to a massive bag of losses.
Bag of losses.
And slow down and spike. But now back to the main question.
So just to follow through with this, right? Let's go to it and see what ended up happening. And it did rally back up a little bit here, and it failed. And in February, and it failed again, and then it tried again, and then it really dumped. So it's still, you know, yeah. It is 100% applicable. And you can look here on this volume profile in this area, and there, you know, there's minimal selling here. Try to make this bigger to see right there that most there's a little bit, but it's mostly green. It's mostly buying up there. And so then anytime, I mean, you know, it essentially, what is this, 320 or so there. Because there was only buying above that. So it's probably never going to get, you know, is this going to take a long ass time. I was trying to get this one, but it looks like there was a split and a 23 for 200 for 23 split back in September, and it's literally not showing any data before that. So I guess this is that squeeze, maybe. I'm not sure. I'm actually not sure, but but yeah, that this was you know, should be eye-opening to the apes, I would think, but you know, yeah, no, right, 272. That's what Trey meant, actually. What he actually meant, it got lost in the translation, but what Trey was actually talking about, where is it? There it is. Oops. There it is. Oops. Clean this up a little bit. To do what I hate, rescale this, but yeah, there's your 272, Trey. And I would say, no, yeah, I would say pretty definitively that there is a much greater chance of returning to this 272 than returning to this 72. How about that? How about that? There you go, Trey. 272? Sure. 72? Nope. Not happening. All right. Have a good night, guys. I will catch you later on. Later. Peace. These are good times. Whoa. All right. There we go.
I met you at my show.
So, yeah.
Screaming on the front row, jumped on stage, knocked me down. You made me horny. I drug you around, put you in the van, took you to the tail. On the way there, you was texting on your cell. You jumped out the van before I got the room. Hopped in the car with your girl and went Zoom. You danced with girls like a freak. You promised me a threesome last week. Another girl, it's hard to find. What about what's her name? She changed her mind. So many people.
Wow.
I can't get time alone with you.
Weird.
I had privacy, single and pole. With you, I can't even jack off no more. You full of shit, full of shit, full of shit, and you need to quit. Baby, you full of shit, full of shit, full of shit, and you need to quit.
D Model 3.
Bad temper. I got another woman that wants me to pimp her. Out of sight, out of mind, sipping wine, someplace I can't hear you whine. You're too controlling. My chin is.
Don't worry, I'll talk shit about the Ortex guy for y'all.
You need to tuck your tail. You're a
69 comments. Wow.
Till you're laying on the ground, bleeding like hell, begging the cops to take me to jail. Inconsiderate, selfish. When I open your legs,
no.
I smell fish. You talk too much to everybody. So flirtatious, so naughty. How can you be jealous on Facebook, keeping up with your ex-fellas? You full of shit, full of shit, full of shit, and you need to quit. Baby, you full of
See you, Lynn. Thank you for standing by.
You don't trust me, I don't trust you. Now what the fuck we supposed
One of these days, I'm gonna turn off the subscriber limit. And I'm sure you'll have a lot of people to ban. But not after, you give them a little bit of rope and let them hang themselves with it. So that Manny and Model 3 dude can, do their thing. God damn. Peter Hahn. Respected CFA. Jesus. Really? Is he? How do you know that? Last year he didn't understand how to read 13F filings. Roll me up and smoke me.
You're so annoying. My career, you're destroying. You're such an envelope pusher. Such a gossip gusher. It's not fly to me for you to in my privacy. Money take, troublemaker, orgasm fake. Who's fucking up my schedule and they won't give me head? Oh, that's you. You wanna run away with my daughter? Meet a new man in Florida. I'm in the studio, rocking it steady. I'll visit my daughter when I get ready. You full of shit, full of shit, full of shit, and you need to quit. Baby, you full of shit, full of shit, full of shit.
All right, that's it. See you guys.